Yeah, so just to switch pace really quickly, I just want to introduce everyone here because we have a couple of new people here today. It's because we have an open house. So I just want to introduce everyone to kind of what we do here on Tuesdays, and then we can kind of continue on. Is that all right? Okay,
Sounds good,
great.
Rob.
Awesome. Great. Okay. So for those of you that are not normal, regular members of our Tuesday class, this is our live algo building sessions class. We do this every single Tuesday. And let me kind of explain to you what happens during this class. So first of all, a little disclaimer here, educational purposes only, we're not giving investment advice, all that kind of stuff. Please make sure you read this before continuing on. But yeah, basically, so this is what happens during one of these classes. So at the beginning, and kind of what we're doing right now, is we have trading idea presentations. We'll usually talk about, what different strategies we're all running, how they're all going, and then are there any kind of strategies that we want to build today? We'll have that usually more open discussion, so everyone kind of can talk about their stuff, as you heard from Phil, right? He's talking about making a sniper bot, which is actually really cool. I think Phil, you're saying, you can make like a couple 100% a week type thing. It's like some people are making like a crazy amount of money doing this stuff. So he's trying to figure out how to do that for crypto. It's basically a bot that would basically figure out what crypto coins are about to go public on like some sort of exchange like Coinbase or whatever. Because usually when coins go from being more private to being on a public exchange like Coinbase, their prices tend to shoot up like crazy. A lot of times you'll see 100% in a day. That's not unusual at all. So, think about if you could do that on a regular basis with all exchanges around the world, that you can make quite a bit of money doing that. So anyways, that's trading presentations. That's one thing that we're talking about. We'll talk about some other ones in a bit. But basically that's stage one. We'll have those presentations. We'll have that discussion. Which is right here. Do you have an idea to build? If any of you guys that are new here, if you have an idea to build, please bring it up. We can talk about it. Maybe we'll build it today. We can create that today. All right. Okay. After that, we're going to be voting, right? So we're going to take a vote after this to see what we want to work on, right? We do this democratically. So we'll see what you guys want to do. Whatever you guys vote on, we will actually be working on that today. Okay. And then after that, once we do the voting, that's when we actually build the algorithm, right? We'll sit down and either we can improve on existing ones, make them better, or we can create new ones or whatever you guys want to work on. This is your time. We can actually build whatever you guys want during this time. Once we finish building it, usually we'll spend a bunch of time tweaking. We'll try different parameters. What if it's a different delta? What if we held it for a longer time period? What if we did this specific thing? And, all these different things that we could do to tweak algorithms. We'll spend some time working on that. Some days we'll spend more time on that than others. And then after that, we're going to, or you'll get the chance to get or run the code if you are part of our plans. If you're part of our starter plan, you get access to a couple of different algorithms. If you're part of our pro plan, you get access to everything, right? So anything that we work on today, if you're part of the pro plan or the all access plan, you'll get access to all of our different code. Anything that we work on today, anything we've worked on in the past, you get access to all of that in our GitHub repository, which is something that looks like this. Right, here's our strategy library. We have lots of different strategies in here, quite a few of them that you can pick from, everything from stocks to crypto to options. We do a bunch of different things. For example, here's like our Condor Martingale algorithm. Really easy to run. You basically just click a button, deploy to render. It usually takes something like 5-10 minutes to run. We've made it very, very easy. We're actually working on a website to make it even easier. So you can run these algorithms very, very simply. Right. And then here, pretty much every algorithm will have a back test with it. Here's, for example, one back test for one of the variations of this algorithm. There's many different variations of it. You could configure it in different ways. Here's, for example, one that we did that had 144% annual return and a very low max drawdown of 12%. We got to actually figure out what the heck this was because this is pretty damn cool. This is a very good result. But yeah, so there you go. You could actually go through all these things. If you like an algorithm, you can run it. It's very simple to do, right? Okay, cool. So you get and run the code. And then this has changed. We have increased our prices. And we plan on increasing our prices further soon. This is just because we've been getting a lot of demand for our products and our algorithms are doing very well. And to be quite honest with you, I don't want to give them away for less than a couple $1,000s. That's kind of the truth here. Like, to be honest with you, putting my own money into this is starting to be a lot more profitable than actually selling courses. So I don't really care, right? We keep increasing our prices. This is now $19.99, and then our all access plan is $14.99 or $4,999, so about 5,000 bucks. We did reduce the monthly fee because we got some feedback that people would rather pay upfront rather than monthly. So we kind of made that change. And then, as I said, we're going to be increasing these prices fairly soon. So right now, our pro plan is about $2,000 sign up fee and $200 a month. You get to be part of all of these classes. You get to get access to all the code that we go through. You get access to our strategy library. I showed you with all of our strategies are doing very well. The pro version of it, so you get access to a lot of them. You get workshops. We do workshops almost on a weekly basis. Every second week, actually, we do them. We have trading signals that you can take a look at, which I'll be showing you. We'll go in depth on this stuff soon. Basically how our algorithms are performing. And if you want to copy them, you could do that. We have a Discord community that you can be a part of. We have a course called Python for Finance if you want to learn how to apply Python to the world of finance. And then you also get our algorithmic trading course, which is what we used to just only sell. That was the only product that we had in the past. We went from selling courses on building algorithms to actually getting very good at building them ourselves. And now we're getting to the point where I'm more interested in actually just investing money, to be quite honest with you. Cool. So that's our pro plan. Our all access plan is $399 a month and $5,000 up front. And you get everything from a pro plan, and then you also get all of our course recordings. We have lots of courses that we've taught over the years, everything on options trading, algorithmic trading, AI and trading, blockchain, all that kind of stuff. And then you get 2 one-on-one hours per month, right? So if you need some help with things, we spend a lot of time with you, actually can help you build algorithms and things like that. And you basically get full service. So if you need to modify anything, if you need help with anything, we're very, very open to helping people that are on the all access plan. We'll spend a lot of time with people like this. All right. Any questions? Awesome. Very cool. Okay. So that being said, let me bring you guys up to speed, both everyone who's new here and also people that are regular members here. Let's talk about how our algorithms are doing and kind of take it from there. So we've been running these algorithms for some time. Martingale 4 continues to do very well. This is SPY 4. When we look at paper dating, it's performing exactly as said they would. I don't know why this pin message is not in here. Where is this? I'm trying to update all these. This is a back test for this algorithm. 34% annualized return with only a 13% drawdown. So it's quite a nice, trade-off there in terms of risk and return. And it's basically been doing what it says it's supposed to do. In paper trading, it's been pretty steady, just trending upwards. It's a very stable looking graph, which is fantastic. It's up 16% since June 21st. So about 6 months, 16%. So we're pretty much in line with what the back test said it would do. And then in my live money account, it's actually doing even better. I'm up 12% since September. So a month and a half-ish, something like that. I'm up 12%. I'd say that's a pretty good result. Then there's SPY 9. This is one that actually just ran very recently with live money. The reason why I ran it is because our paper trading has been doing really well with it. Paper trading, it's up since July 5th, 12%. But what I like about this one is that it just doesn't trade in times when things are very volatile. So it's kind of a way of diversifying. Here is the back test for it. It's 80% a year, only a 22% drawdown. So it's a pretty good payoff there. And then it's also just performing quite well so far, even despite all the crazy volatility, right? So usually these types of condors, when things are very busy in the economy or, for example, things like elections that cause a lot of volatility, markets up and down a lot, condors don't tend to do very well. But this one actually is very good because we have that VIX thing on it. I think we have to have a VIX of less than 11 for it to trade. So it's very, very conservative, but it actually does quite well. Again, lots of flat periods, but then I would expect when volatility comes down, presumably after the elections, assuming nothing crazy happens, next, because I think it's what, next week, actually. I think it's literally a week from now. I would expect volatility to calm down a lot after that. So maybe after that, we'll see Martingale 9 perform even better, right? Because it'll trade more often. But so far, off to a good start. I've been running it for a week. It's already up a 0.5%. So going in the right direction. Diversified leverage, as usual, doing very well. This thing just keeps going up every week. It's up now almost 44% since I ran it sometime last year in June. Right, so 44% in a year. I'd say that's a pretty good payoff so far. We have EMA spreads 2 that's been doing very well as well with real money. Since September 18th, it's up 9%. And then here it is. It's, for some reason, my live money account is actually doing better than paper trading. Paper trading is up 3% since August, and my live money account is up 9% since September. So I don't know why we're beating paper trading by so much, but I'll take it. You know, it's real money. I don't mind getting a 10% return in a month. It's quite nice. Another one that actually started running as well is the SPY Gold IWM. I started running this one last week as well. So far, it hasn't made any trades yet. I know it has quite a few things. Could not get priced for buy option, getting prices. Some stuff, maybe there's something I need to take a look at, or I think it's maybe just not the time for it to trade. I don't really know these logs here. I need to ask Jack. That's a new one. So these are two new ones I'm running: is SPY 9 and SPY Gold IWM. You know, because they've been doing really well in paper trading. Here's the paper trading result. Right, it's up 7% since September. I'd say that's a pretty good result. And I really like it. And I know Ali, you've been working on this a lot, where basically it has all these different asset types, right? It's not just investing in SPY, but it's investing in SPY, gold, and IWM. So it's more diversified. So that's actually one thing I really like about it. And I've been reading a lot about people saying they think gold is going to go through the roof. I tend to agree with them. I like the fact that it owns gold. So that's one of the reasons why I bought it. And then we have Alpha Picks. This one's also been doing quite well. It's had a little bit of a drawdown recently, but still up about 4% since last month. This is only trading stocks, so I'd say that's a pretty damn good result for stocks only. Here's that in paper trading. In paper trading, it's up 12% since August. So 2 months and a week, 2 months and 1 week. So that's what, 9 weeks, 12%. I'd say it's pretty damn good for a stock only trading algorithm. The one algorithm that we've been running that's had a bit of a drawdown over the past little bit, and you guys may have seen this, and some of you guys might be running this. The past, let's say, week or two, we have had a bit of a drawdown. So you may have seen that. I'm personally not too concerned. I know this is happening because of volatility in the market. Election season's definitely rumbling things a little bit, but it's still up, at least for me, 2.5% or almost 3% in less than 2 months. That's still a pretty good result, especially for something that's uncorrelated with the markets, and we can get things going there.
Yeah, it's
Hey,
still well within the threshold.
yeah. Is that Anton? Is that you? Hello? A AN is that Anton?
No,
No? Okay. All right. Sorry. You have the same first initial. Because I know he's actually running this thing. So I'm wondering if that's the case. But yeah,
no, I'm running it too, but it's
oh,
yes,
you are.
it's still well within the drawdown, the max drawdown. We're not even close. So
Yeah.
yeah, it's not a big.
Yeah, not even close. And when you take a look at it from a longer term perspective, here it is in paper trading. I mean, that drawdown is just this thing. Like that's not that big of a deal. You know what I mean? It's just because the time frame is pretty short. So in the long scheme of things, it's pretty minor, right? This one in paper trading is up. Where is it? It's up 15.5% since August 6th. That's what, August, September, October. So 3 months, 15%, it's doing like 5% a month. I'd say that's pretty damn good, you know? And in general, the longer term is 77% a year. When we back tested it and the drawdown was 31%. So, we're definitely well within that range, 100%. I definitely agree with you. I'm not concerned about it. Um, but it was, I was just excited because it was up so much. It was up like 20% or something before it fell. But that's cool. I'm going to keep running it personally. I don't mind. you know. But this is also why I like diversifying, right? This is why I like putting my stuff into different types of algorithms, even if they're all iron condors, right? The different configurations still have different types of things that happen, right? You have some that look at VIX, some that don't, some that trade different deltas, all these different things. So you end up getting, still that really good return, but diversified, right? So you reduce your risk. Is that whole typical thing. Diversification is the only way that I know where you can have a free lunch in finance, right? Basically, you can reduce your risk and still keep your returns high. The theory, and I don't know how much you guys know about finance theory. This is something I learned a lot about in my master's degree and also just in real life. Um, the more things you can get that have high returns that are uncorrelated with each other, buy into all of them at the same time, you'll reduce your risk and keep your returns just as high. So if you can get a bunch of algorithms theoretically that have 100% a year return each, they're all uncorrelated with each other or loosely correlated with each other, and you put some money into each one of them, then you can still keep that 100% a year return, but reduce your risk they have in it. So you have less drawdowns and things like that. And this is a perfect example of this, right? Because we have all these different algorithms that have, 30, 40, 50, 100% a year returns, and they're all kind of doing slightly different things, right? They're all iron condors and they all have high returns, but one's doing better than the other, right? So you're seeing that nice diversification benefit there. I plan to put money into one more algorithm sometime this week once I get a chance to. And one of those things I want to put into is one of the ones that we created last week. These I think are really appealing. So far, off to a good start is SPY 22. This is that crazy one that we made last week. If you guys remember this, 146% return. Holy shit. 38% max drawdown. It's a little bit aggressive, but very, very high returns. I'm thinking about putting real money into this one, right? So far, it's off to a good start. It's doing what it's supposed to do. It's up 4.5%. That's from one single trade. You know what I mean? And it's trading again today. We'll see how this goes. The only problem is we've made a couple of these, and I actually want to talk to you guys about this today. And if you guys want to work on this today, I think it'll be interesting to work on. Is we made these other ones. We made SPY 18, 19, 20, and 21. These are all the ones that we made last week. But you can see here that none of them have really traded except for 22. And the reason why is because of this. It says the bid-ask spread is too high. And that I believe, and we can take a look into this and figure out if this is actually true, but I'm pretty sure this is the case, is because it's buying things that are pretty far away from the money in terms of the options. And I think because of that, it's getting really big spreads on those far out of the money options. I think that's the issue here. And I think that's why SPY 22 is still trading, because this one has a 20 delta and a wingspan of 3, whereas these other ones had a much lower delta to begin with. So when you have the bigger wingspan, you end up going so far out of the money that you end up having these big bid-ask spreads, right? And I think that's the issue here. Right. So if you guys want, we can refine this a little bit, because I'm very excited about what we came up with last week. The bigger wing size, was a really good insight, I think. But I think we need to either figure out, maybe we could still trade with that higher bid ask spread, and we just make the trading mechanism we've talked about for a bit, where we place limit orders at the midpoint, right? And we say, okay, fine, the bid ask spread is high, but we'll still trade as long as it's a limit order at the mid, right? Then that's something that could work. Or we can do kind of what SPY 22 does, is just do a higher delta. This is a delta of 20. So it means when the wingspan is larger, it's still not that far away from the money. So we can do something like that, right? We could do a delta of 20 and or some higher delta, right? And we could have these different types of wingspans. So yeah, so that's kind of my thoughts here. I'm very excited about these 18, 19, and 20. I'm a little annoyed that they didn't trade, but to be honest with you, not that surprising, because when we were looking at these results, they were so damn good. I'm like, holy crap, 97% a year with 31% drawdown. That's a really, really good result. And 22 is even better. Like this is pretty crazy results. I always like looking at ROMAD. This ROMAD is just off the charts. Like a 4 ROMAD is fantastic, right? Or 3.8, almost 4, with a high Sharpe ratio. Like this is like a really good payout, I
Uh,
think.
that bid ask spread, is it 15% right now? You said that's 15%.
Correct.
So that may be somewhere we can, instead of just getting rid of it, just relax that. That's
Yeah, we
one thing.
can. We
And
can.
then and then also this 20 is pretty good. I mean, that's a very safe way to play, to have a, because if it's liquid, that means that market is less volatile too. So it kind of catches it too. So 20 and 3 for the wing size, I think that's pretty optimum. That's pretty good.
Yeah, we can get into the weeds of this. Some of them have spreads, like this one, I was seeing spreads of 67%. I mean, that's pretty damn high, right? This one has a spread of 22%, and it never trades because the spread is 22% and the max is 15. So,
Yeah,
and
that's
I don't
great. Yeah,
know.
but that's the deal, right? So that you know that you get into the market when it's liquid enough, and that's
Yeah,
fantastic.
yeah, but the problem is that these are so far out of the money that I just don't think they're ever that liquid, right?
See, the thing is, the VIX has been pretty high. I mean, VIX is running in the past few days, actually, couple of weeks. VIX has been around 20, and 20 is high. If VIX comes down to like 15 and stuff, you would have less of this issue. But then you get less fails. I mean, you trade a little less when VIX is high, but then you get a lot less drawdowns in the actual market. I think that's a good deal, just to be a little patient with those. But yeah, the 21, what was for the 20? This number, does it show for the
Yeah,
uh,
this one, for example, has a spread. The biggest spread was 22%, which is exceeding our 15.
yes, yes,
At one
yes.
point it was 18. Like it would be great if it took a trade here. This would be perfect. You
Well,
know?
you can just relax it if you wanna. If you wanna take more risk, all you have to do is relax that criteria, and from
Yeah.
15 to 20. I mean, if I was running it, I would be fine with 15, and I would just let it go until market is good enough to trade. But if you want to be more aggressive, I think the best solution would be to relax this, and you want to do at those lower deltas, right? If you want to
Yeah.
do lower deltas, but then lower deltas are gonna have less return too, right? So if you do the 20 delta and keep it tight in the real market, you probably get better results. To keep this tight at 15 and do the 20 instead of relaxing it, and then you get less return and more probability of actually getting into non-liquid market, and get more volatile drawdowns. So it's just all trade-offs, right? As you know.
Yeah, that makes perfect sense to me. My thought is, we do three things, right? We can relax this to increase it. So instead of 15, it's more like 20 or 25, right? Then this would be taking a lot more trades. We can do the 20 deltas or the higher deltas in general and use those instead, right? Because the higher deltas, will tend to make more money. Maybe we'll find other ways to reduce the risk, right? So we do the 20 deltas. And I think there's something that we should work on in general is that we should figure out that like order placement mechanism where we'll automatically find like a midpoint and then just use limit orders to modify the trade, do that sort of thing, so that even if the spread is big, you could have a 25 or a 30 spread, we're still aiming at the midpoint, so we're actually playing pretty well in that kind of a market, right? I think that's something we should probably build in general, right? But yeah, those are kind of the three solutions I see, right? We could do the higher delta, we could do more relaxed bass spread parameters, or we can do this new type of trading, or we could do all three. We can, maybe in the amount of time that we have today, maybe we could do all three of them, right?
Yeah, yeah.
Cool. So yeah, so that's my update. I'm really enthusiastic about these condors. I love these iron condors. I want to put a crap load of money into this. I've been talking to you guys about this for a little bit, and actually, Ali, you and I, we had a meeting last week about this. I'm trying to move a lot more money into this. Like I want to move like 100 grand into these condors. But in order to do that, I need to set up interactive brokers. So we've kind of been trying to figure that out. I think we figured out the issue with SPX, by the way, Ali. It's not, I didn't get a chance today to actually try it and upload it and all that kind of stuff. I'm going to do that tomorrow. But I think we got SPX working, at least according to the developer that's been working on this, Martin. All right. So he said that he got this working. Let's see if that's actually the case. I'd like to try it. Let's see if that works. Because if SPX works, then we can throw a bunch more money into it. You don't have to really worry about liquidity as much, right? Now we
Oh
can,
yeah, it's more liquid. Yeah, so you have less of this stuff with SPX already, less of these spread issues and all that stuff, because that goes all the way to, it's liquid all the way to 5. You know.
yeah, exactly.
So
So, then we can trade like $1 million in this, right? That
well,
makes
no, I doubt you can go that far, but you can
you don't
go
think so?
a lot farther than SP1. Well, we'll see what the limit is, right?
I,
The
th I
limit
think we could do more than 1 million, and the reason why
in
is because
one, but in
yeah,
one. Well, I don't think I think the limit would be like half with SPX, but I mean that's just my guess. Who knows?
I think it's pretty high, and the reason why is because I know a company that actually trades these things, the SPX condors, and I know for a fact that they're trading multiple millions of dollars for their clients. So if they're able to do it, right, then why wouldn't we be able to do it as well? Right?
One way, there is a way to do it if we can not just one shot a day. If we can break the trades into multiple trades. And then the more we can get it to work with multiple trades, the more we can take advantage of the bigger. I mean, we're gonna have a bigger size account. We're gonna be able to have bigger size account, and the account will keep building. But that's something that we should really also get into and test to
Yeah.
see, instead of just once a day, what if I do it like 10 times a day during the last 2 hours of trading, or 5 times a day during the last hour? And what happens to that back test and also the paper testing? But that would give you a lot more runway in terms of how much you can put in this, and it would work in terms of liquidity. So
Yeah.
that's my opinion.
Yeah, that makes sense. Yeah. Yeah, one step at a time. Right now, kind of our focus is trying to get just SPX working in interactive brokers, right? Because I need to do an interactive brokers too because it's Canadian money. So I can't use US brokers for these larger sums of cash. So I'm also incentivized to do the interactive brokers thing. Um, so yeah, so that's kind of what I'm thinking is like we need to get that working, get SPX trading in there, and then we can do these larger sums. But up until then, I mean, SPY so far has been working out quite well. I haven't seen any issues with it. I haven't seen any liquidity problems, even though there's been more and more people using it. Um, don't see any problems with it yet. So I think that's pretty interesting. Um, and then the more that we could do, and I guess another thing we could do is we could try different assets too. Like what if we did QQQ? What if we did IWM? What if we did gold? These are all pretty liquid option markets. This way we can spread things out more too, and there's more liquidity that way as well.
Yes. And it's interesting that you're seeing the real account is doing better than paper account, because the paper account also, the liquidity and stuff is kind of like they just kind of let go. They don't really track the real market, right?
Yeah.
So if it's kind of conservative the way they're representing the market, so the actual market is even more liquid. So that's good news that we know that the paper trading is not exaggerating. Actually, we get better results. So this actually putting a little money into this is teaching us a lot of good, interesting lessons.
Yeah, absolutely. And I want to make a bunch more accounts. Like I have another 4 or 5K account that I want to put this 22 on. And then I'm gonna move like bigger sums of money because like I'm just seeing these crazy results. I'm looking at my stock portfolio because I manage mine and a bunch of other people's money just manually trading stuff. I'm looking at what I'm doing and I'm looking at our algorithms. I'm like, why the hell am I managing things manually? Like
It's
these
true.
things are performing so much better than what I do manually. It's like I look at one account, I manage an account, it's like $1.8 million now is one account that I'm managing. And it went up like $100,000 in like 6 months. I'm like, dude, if we had even a fraction of that in some of these things, this would be well over $2 million by now. You know what I mean?
Cool.
So I want to start moving more money into these things. I'm very enthusiastic about this personally. Yeah.
Cool.
Yeah. Cool. Okay, awesome. So yeah, so that's the update. Hello Cbot's been doing pretty well too. That's kind of an interesting one. What else do we have here? Spy One, this one continues to be on a tear. If you guys ever want to gamble, this is since June 4th, it's up 135%. That's pretty damn good. But I think this is our third one. We've blown this up twice already. So if you want to put your money on red and see what happens, here's one that you can try out. And then we have our alpha picks. So we got a couple other ones here. Mark Greenbot. I got to look into this. For some reason, this one's holding a bit too much cash. Has a lot of money in cash for some reason. I don't know why. But yeah, so far things performing very well. Like I said, we're getting some very good results right now. I'm really just thinking about how can we monetize this more. That's my thought process. Cool. Okay. So, why don't we talk about, what do you guys want to work on today? So I'm going to put together poll here. Last week, let me just duplicate over what we had last week. And let's edit this. Okay, so last week we talked about we could work on condors, which is basically this stuff. I think there's a bunch of things we can do with it. We talked about EMA spreads. We have a couple versions of it's running right now, and they're actually doing quite well as well. Right, so spreads is interesting. Although again, Jack isn't here. I gotta message him and be like, when are you joining? Because it'd be good for him to be here and we could work on this stuff. But I know he just got back from vacation. We could work on the crypto sniper bot. Phil, I can't stop thinking about that one too. That's a really interesting idea. I would love to help with that. So if you guys want to work on the crypto sniper bot, I think that's really cool. And then we also talked about the Wyckoff method last week as well. I don't really know much about it, but you guys seem to think it's a very good idea. So we can work on that. Anything else you guys want to work on? Anything else that you're interested in that you'd want to build?
So this is exciting. Really. Someone else was saying something. Okay, so basically, this is a citing that we were gonna that kind of I mentioned it in the chat with you. There is a really helpful parameter that you're already generating, I think, in the code, and that's the beta of the account that you're tracking. And actually, I guess these are just accumulate and in some kind of a data frame, and then at the end you create those plots, right? As the algorithm runs. So this beta, actually, I noticed that there's a good correlation between when the beta of the account goes high and there's a drawdown in those spreads, right? So basically, if we can catch that beta value and get it into the config, so we can use it, basically use the beta to, like, we check wicks or whatever we check for volatility or whatever, IV, all kinds of things. This beta thing, the value of it is really helpful to find out if we've gone too far in one direction. So if we are over, we are too far ahead of the market in terms of how much we've grown. So that means that there's going to be a correction soon. So we can use that to tune it a little more, and it will help to reduce the drawdowns and also helps to build probably the performance a little better. So that would be something, and I don't think it takes very long to figure out where it is and how to get it and do it. But this could be something we can do on the site tonight or offline or whatever. But that would be extremely helpful to have that, and I don't think it's very hard to get. So
Okay, yeah, I don't think it's so either. But I do have a question. A beta. You say beta of the account.
right,
So
data of the portfolio, whatever's in the account. So
Whatever the
basically, what beta does is it compares you how aggressive you are compared to the S&P. And usually they use it compared to S&P. So basically, how volatile your account is comparing to how volatility of S&P. So if your account has a lot of calls in it, and it's been doing calls and so on, then your account basically is betting the market keep going up. And you could be with the options, you could be like 10 times S&P, right? You're betting that it's going 10 times S&P, and then you can set a threshold for that. So once it gets say to 1 or 1.5 or 2, you stop buying calls. You say I have too many calls now, and if the market turns around at this point, all these calls are going to lose money, right? So you want to stop it when the beta is too high. So it just measures the volatility of the account compared to S&P, and both in positive and negative direction. So if you have too many puts and your beta is say lower than -2, is -3 or something, that means you have too many puts, and the market is going to come back, and then all your puts are going to lose money. So that's how basically you use the beta.
So would this be for the iron condor, or would this be because to me this sounds like, if you have a high beta, you're owning a lot of calls. Yeah, that makes sense because then you're very correlated with the market, whatever. But condors, they tend to be beta neutral, right?
Right. It probably won't help a lot with condors, but for the spreads, since we have we're buying small size trades, and we have a lot of them always. That helps with that. That we can control when to stop buying calls, when to stop buying puts, and then when you stop buying calls, automatically you buy more puts, and it's kind of self-hedging when you do that. It's self-hedging. So basically, I think we have to test it, make sure it works. But the first step is to get that value, and then we can test it out and see how we can optimize everything using that.
Yeah, that makes sense. That makes sense. Okay. So yeah, if we're doing that, I guess on the spreads, that's really, so if we work on spreads, we would add in that beta component.
Exactly. Yes.
Yeah.
Or anything like that, anything that basically is kind of directional and tries to kind of catch the market on both directions in the future, that would be useful for anything else. I mean, we could use different kinds of spreads, different kind of option strategies in the future. I'm looking at some diagonals and things that seem to be a lot more flexible in terms of how the market moves, and they should have less drawdowns. But and those also are directional still, right? So you're guessing the flow of the trend of the market and try to follow that trend, and then you basically you trade according to the trade. And obviously it has worked, right? Because we're getting 4 year, 3.5 year, 4 year, and it's working. It's not like a lot of people say no, it's not. You can't. Basically, you can't be 90% of the time right, or 95% of the time right, but you can be right 65% of the time, just following the trend, and that's all we need for these things to make money. So basically, yeah. So it would be useful for a lot of other things that we might be doing in the future also, I think, to have that data.
That makes sense. That makes sense. Okay. Yeah, that's not a hard thing to do. All you got to do is just look at your portfolio value, log that, and then compare it to the market. Like I know exactly how to do the calculation. I bet you we just throw into AI. We could do that in a couple minutes. It's pretty straightforward, to be honest with you. The only hard part that I see about beta is that when we restart the algorithm, we're not going to have the previous data of how it's performing. So it's like whenever you restart, you reset beta. But it also depends on how far back of a window you want to go. If it's only like a day or two, that's not a big deal. If you want to go back like 30 days, then you got to wait for the algorithm to actually run for 30 days. Or maybe, we're just looking at the assets that we currently own, and we can get like some sort of beta calculation off of those. There's a bunch of different ways we could do it, right? But
yes, and then also there are things we can do to basically be able to change the parameters while the algorithm is running without having to stop it. so we won't have that, or save the state at least. Save the
Yeah.
state of the algorithm. So if you stop it and you restart it, you can do it, or you can set it up so that on the fly you can change the parameters. But sometimes, the server's down, power's out, whatever. It's good idea to save the state also, and then
Yeah.
when you restart it, so that would be something to work on too at some. But that's probably too technical to do it here. But that would be something that you
Actually,
just.
it's actually not that hard. We have that built into LumiBot. So if you're running with a database, which when you run the bots, you go DB connection string, and then you put in a database, and you basically set all of your variables using self.vars. It actually does keep state automatically. So we
Okay.
can do that. That's actually not that difficult to do.
All right, cool. Yeah, that would be good to have it activated too. So basically, all of this stuff that we're doing, we can stop, or even if the power goes out, you lose everything unless you have that, right?
Right. Well, when you run the server, it's like very unlikely the power goes out. Like last time I remember stuff went, there was an outage at AWS. This was, God, what was that, like 7 years ago, 8 years ago, something like that. It basically took down half the internet. You know what I mean? So it's
Yeah,
like,
disaster.
that the probability of this is really low for you to have like an outage like that. But I think more likely if you're resetting the bot, if you're changing parameters or something like that. But again, we could save that to a database. That's not too difficult. That's a pretty easy thing to do, especially something like this. You're basically just adding things to a list, and then you just check it over time. It's pretty straightforward.
That's cool. Yeah.
Yeah. Cool. Okay. Awesome. All right. So I got a couple things on the list here. I have condors. Let me give you guys a visual.
I was
Maybe.
also interested in converting the alpha picks into an option strategy.
Okay. That is pretty cool too. I think that's a great idea. Alpha picks with options. I think that's pretty cool too. I agree because it's doing really well by itself. What if we just bought call options instead, or spreads, or whatever? I feel like that's a pretty straightforward thing to do. I know we kind of went down that path once and we got derailed a little bit because we started going into the spreads, the EMA spreads, and then I don't know, it's kind of got derailed. Um, I, I I think it's pretty easy to do something like this. We already have some of that code that we built out. I wouldn't use Jack's code. I would just make it brand new. I think that's pretty easy to do. And we already started on it last time, so we could probably knock that out pretty easily. I think that's really cool because for those of you that don't know what he's talking about, we have had really good results with Alpha Picks. This Alpha Pick strong buy up 12% since August 20th. When you look at the back test results, I don't have them here. We pull up, I gotta feel more stuff in there. Where is this Alpha Picks? There it is. This is how Alpha Picks has done over a longer period of time. This is what, 2.5 years. S&P was up 50% or 46%. Alpha Picks was up 125. So it almost tripled the returns of the stock market. Imagine that was in options, right? Just add a little bit more leverage to that. I could see Alpha Picks being easily, 400-500% over this same time period, right? We're talking about 100 or 200% a year. I think that's very possible. And actually ours is doing even better than this because we only take their strong buy picks. So we even are more picky than they are, right? So I think we can have some pretty crazy results with this, to be quite honest with you. So I agree with you, Worth. I think that'd be a very cool thing to build. Okay, so I added that to the list. Anything else you guys want to work on? Any other ideas, thoughts? If you're new here, feel free to speak up. We like hearing new voices and new ideas. Okay, awesome. All right, so let me put out this this poll here. I'll launch the poll. Okay, it's out. So you guys can vote. If you don't know where to vote, there's a poll button on Zoom. You can click on that and you can vote on any one of these. Again, there's the Iron Condors, which we've been running for a while, doing quite well. We have EMA spreads. We have the Crypto Sniper bot, which is, I think, very, very interesting. Wyckoff method, I don't really know what that is, but you guys seem to like it. And then we have the Alpha Picks options, which we were just talking about. We can work on any one of these. So I'll let you guys vote. I'll be back in about 5 minutes. I'm going to use the bathroom, get some water. And when I get back, whatever you guys have voted for, and so far there's a pretty strong bias in one direction. We'll see if that stays. There's still 4 more people that have to vote. So whoever 4 of you are, please vote. I feel like I'm one of those election people right now. So yeah, so vote on what you want to be working on, and we will do that during the class. Be right back. All right. Hey guys, how's it going? Let's take a look at this. You guys got a chance to vote here. I'm going to end the poll. You guys definitely had a pretty strong bias towards one algorithm, I guess is the last one that we were talking about. I'm actually kind of surprised that you guys voted this way. I was expecting more people that want to work on the condors, but here are the results. Right, so we've had pretty even across the board on all the different algorithms, except for alpha picks with options. You guys definitely seem to want to work on that. So let's do it. Cool. I think we already kind of did this, started working on this a little while ago, a couple weeks ago. I know we started working on this, so we could just take that code and run with it. So let's close. Actually, we could leave this open. And let me check one quick thing here on my phone. If you guys can actually give me one quick second here. Sorry, just one second here. I need to do something here for someone working on our website. I know I've been telling you guys about this. We're actually making some really good progress. I'm hoping then the next like maybe week or two we'll have this website up and running. Maybe it's a little optimistic, but I'm definitely very much looking forward to getting our website up and running. And I just want to make sure this guy can actually work on this stuff. Just 1 second. Sorry, guys. Here I am. And then I need to give him permission to. Okay, cool. So let me get everything loaded up here. So we have the strategy library. I'm going to open that up. And then when we were working on this last time, we made a project. I think we called it options. Don't remember what we called it. I was looking through all the projects I have here. I'm trying to find which one. This is stock alpha picks. This is the one that is currently being used as our alpha picks bot.
I don't think we talked about this, but we didn't. I don't think we ever started
No, we definitely started. I remember actually working
the
on it.
options.
Yeah. Yeah, we started working on it, and then halfway through when I was working on it, you mentioned that basically we could do with EMA spreads instead, so we shifted gears. I remember actually writing this code. So I'm just trying to find where I wrote that code. Spreads, martingale, straddle, multi-bot, backtesting examples. DO test I transfer. I don't think I deleted it. I hope I didn't delete it. Multi-bot Condor Martingale, day trading assistant, diversified options, diversified leverage spreads. I think this is the one that we were building, right? Because we're saying we want to do this with diversified leverage, right? Because if we could do it with diversified leverage, then we could do this pretty easily with the alpha pick spot, because it's basically the same thing. You give it a list of tickers and then it buys the spreads on them. So we talked about actually doing this with diversified leverage, right? And then we can swap that over to use alpha picks, right? So why don't I rename this to be options alpha picks, right? Right. I think that's a more appropriate name, and then we can start working on that way. Instead of, because then the last time we talked about, we could just do a diversified leverage, right? But we could just, why don't we just go straight for it, right? Alpha picks. Okay, we got that. I'm just going to check if everything else makes sense here. All right.
Isn't it easier to actually modify the one that you're already doing alpha picks? And then just
I'm
change?
basically going to do that. That's exactly what's going to happen. Is I'm going to take that code and copy it over.
Okay, cool.
Yeah. So yeah, in many ways, we are going to be doing that. Yes. Right. Because I'm going to take that code. It's going to use the same code to get all the picks and whatever. Right. But I want to just make the mechanism that actually buys the spreads, or we can make it spreads or call options. Maybe we could give like an option to do either one of those. Right. And then we could run it. The only problem with this is that we can't really back test this alpha pick stuff. Right. So I'm going to back test it with running a fixed set of parameters, right? So buying SPY, buying QQQ, right? In this fixed percentage. And then once we have that working and that's back testing, then we'll switch that over to use alpha picks instead, right? And then throughout this, that we should also have created a bunch of cool new functions where you can buy spreads. Yeah, so we actually already started working on that. We can create a spread from a component, which means that we can actually use that in other algorithms quite easily as well, right? So it gives us a lot of flexibility from that, right? And this is good because we already built a lot of it. I actually remember when I did this, where was I? I was driving back from New York. I was somewhere in Rochester, I think, when we built this. I actually remember the specific thing. I was in a hotel room building this out. Remember that. Okay, cool. So here is alpha picks. I'm going to close that down for a second, and we're just going to focus on this. That is just going to buy SPY and QQQ in these percentages with these different things here: step size and deltas, buy and sell deltas, days to expiry. All these things are here automatically. Maybe we want to go further, days to expiry. We can mess around with a bunch of things. But cool. Okay, so let me run this and we'll just see where we were at, because I don't remember exactly where we left off at. No such file, Python 3. Really? Okay. Something weird happened. No module name pandas. Yeah, something got messed up with my Python. Okay, there we go. We're running the back test. Also, that developers that's been working on interactive brokers, he's been doing some great stuff. He was able to speed up back tests. I don't have that working right now because I didn't get a chance to do it in time, but apparently he was able to double the speed of back testing as well. That's a pretty nice improvement.
This 10-day expiry, I think for this purpose, 10-day expiry.
Definitely not what we want to do. It's definitely not.
Right.
The reason why we had it at 10 days before was because of like the issue with getting prices for things that have a longer expiry date. So that's why we kept it at 10. But in real life, I think we want to do it longer. Actually, in real life, we're not going to use this at all, right? It's not going to go from a configuration file. It's going to be loading it from AlphaPix itself, right?
Yeah, probably 90. At least the highest should be 60 because this is kind of a buy and hold thing. It's not, they're not gonna. Why would you wanna? Why not wait until actually, it works? So yeah.
Yeah, I agree. I agree. So, we're back testing over this time period. I'm going to do a shorter back test, short time frame for testing. I'm going to rerun this thing. Shorter time frame. Let's see how it worked. I'm wondering if it actually places these orders or not. It should be a lot faster because it's only a couple days. Basically, it goes, let's see how this functions exactly. I'm trying to refresh my memory here. Check stop loss. Check take profit, buy spread. Create spread. So there's a create spread mechanism. This is buy spread. I'm just going to walk through our code. Let's see what's going on here. Okay, all right, I'm going to run this in debug mode and let's see what it's actually doing. Okay, so here is the result of that back test. And more important than the results, because the results are going to be very different when we're running alpha picks, is whether it actually traded correctly. So here it bought one SPY call option, also bought SPY itself for some reason. I don't know why. And it sold SPY call. And here it bought SPY call and also just SPY by itself. I don't know why it's buying the underlying. And it sold the call. So this is the spread.
Seems like it's a covered call.
No, because it's buying a call and it's also selling a call. It's doing both.
Buying the call too. Okay,
Yeah,
it's a collar or something. Collar or whatever they call it.
something like that. Yeah, I don't know why it's buying the seems strange to me. But here it's yeah. So this is it bought it at 10:30 a.m. Bought this at 10. Yeah, this sold and bought both at 10:30 a.m. For example, here is the SPY call, so it's strike 551, and then this sold at a strike 558. So it is buying that spread. Right.
All right, so it's not buying the underlines, but so yeah, it's just a spread. Yeah, buying. So yeah, that's true. That's correct.
Yeah, it's buying those spreads, yeah. I don't know why we have SPY here. It says SPY got filled. Maybe that's a bug. I don't know. Because when we look through it here, it doesn't actually own it.
Yeah, it means the call probably.
Yeah, I think there's some sort of bug in our thing that's displaying here. Because it shouldn't be. Oh, I know why. this is why, because we made some changes to the way that our orders are being stored when we're buying these types of spreads. So to SPY, that's actually not correct because that is an option, but it is a multi-leg option. So there's some details to it. So it is a bit of a bug, sort of. Okay, cool. So we'll have to look into that at some point, but that's not too important right now. We'll go through here. Okay, so now we go on trading iteration. This is we sell if we're assigned. We also check our take profit. So yeah, so when we're doing these options, they need to be a little different, right? Do we want to just hold them to expiry? Probably not, right? We probably want to sell them a while before they expire because then we get hit by theta really badly.
Yeah, so what I recommend is to sell it 2/3 or 1/3 left to the expiry. If it's still recommended, buy it again. So that way you take advantage of the theta to the point that it's useful. And then you sell it, and then you do another trade, you pay 60 cents, whatever that's fine, even if you pay commission for it. And you refresh it as long as they're recommending it. So each time you check, are they recommending it? Buy it again. Sell it 2/3 down the road and keep doing that. And they don't recommend sell, right? There's no short. It's just bullish, right?
Yeah, this is only a bullish thing.
Yeah. All right. So just do the call. Yeah. Just do the call spread. And this is the best. I mean, if you put the arbitrary stop loss and stuff, a lot of times for the debit spreads, really stop losses should be like this. For the credit spreads, you have to have a hard stop because they go too far, the loss. You have to have a hard stop. So stop loss definitely needed for credit spreads and condors and butterflies and so on. But for this sort of thing that is debit, you gotta just give it breathing room instead of cutting it out because you take too many losses that way. But then this kind of stop loss that uses theta basically is the most efficient because you don't want to hold it because you don't know how it's going to be doing at expiry. So you don't want to hold it at that point. Or you don't want to cut it out at any point. But the theta statistically helps you because you keep the value of your theta as long as it has, good value. And then you refresh it. You refresh your delta that way. You refresh your gamma, and it would be the best. The same way we do it for spreads, pretty much, right? For the EM spreads, that's pretty much. And then 90 days, if you want to be too aggressive, 60 days. Nothing. I mean, there is no reason for these to keep trading them at short times, right? These are kind of recommendations that they're recommending for a couple of months at least, if not more, a couple of years, right? So
Yeah.
Yeah, I think that makes sense.
that's probably.
I mean, we don't want to sell and then rebuy. We don't want to sell at a loss and then rebuy it. So, longer dated would be good. I think the theta is a good idea. Get rid of it before the theta decay kicks in, and sell when they tell us to sell. But yeah, avoid that theta decay. That's kind of why I was asking what's the average hold time on these things. I don't because we want to buy longer than the average hold time, or like Ali said, buy shorter and then just rebuy. But I don't want to sell at a loss and get back in. That would be detrimental to our bottom line. The other thing is, I think that we should have an option to just buy calls or do spreads, because I mean we'll make more money on just plain calls. So, but spreads are safer. So, be great if we could have that as a parameter.
Yeah, we can do that. There's definitely something we can make a parameter. Okay, cool. So, all right, the spread. Okay, so it goes through here. It checks if we're assigned. So there's a take profit check. But take profit percent, we did set that last time that we had a take profit of 100%. So why don't I disable that for now? right? And then we can we'll figure out how to these parameters I have to change because these actually don't make sense, but we'll do that when we get to it. Okay, and then we go here. We check.
Yeah, because the beauty of this algorithm is getting those 2000% plus winners, you know.
Right. Yeah. Yeah. Imagine some of these stocks. Like, I mean, I bet you one of these stocks just took off like crazy in the past week or two, or three, because Alpha Pix is just up so much. And the only way that's going to be up so much is if you have like some sort of big winner, right? Or maybe they're all big winners, even better. But you know, you have one of those big winners that they just picked and like, wow, this thing's taken off. You could have like that big, like 1000% return on one of them, right? Okay. Let's see here. So time to create spread. We have a stop for today. We have, if we've already purchased spread today, then return. Okay, and then we loop through all the underlying assets. Right, we go one at a time, and then we go buy spread for that one. So we go buy spread. It goes into the buy spread. We get the underlying price. We can't get the price. We log it and move on. We could get the price there. And then we go expiry, find next valid option. We've done that many times in the past. As long as we found the asset, we're good. If we didn't, we return. And then continue. And then we go, okay, expiry. Last check if we already bought options with expiry. This we need to fix. Last purchase expiry. This needs to be multiple assets. So we'll go last purchase expiry. Let me see where we're doing all that. Like this. Should be a dictionary. Okay. And this needs to be changed to something like that, exactly. Okay, and then we go create spread, and that takes us into here. And this is actually going to create the spread, which it seems to be working because when we looked at it, it was doing it, but let's just confirm that here. Submit orders, being placed as a limit order as well.
So Rob, I would also see that the thing is, if you don't take profit at 100%, you want to refresh it at that point too, because once you get at around like 100%, then the growth, if you look at the curve, the growth slows down. So if you take the profit at 100% and then buy another one, then again you refresh your delta and you accelerate your growth. So it's good to do that. I mean, it's not like you take profit and you go, oh, you just buy another set, and that way your acceleration is better that way.
That's a really cool idea. I like that.
Yeah, I like that too. The complexity of options, right?
Yeah, that's it. Because it's not linear. It's you gotta go with the curve, right? So
yeah, I've seen that before too. When I was buying calls on Coinbase, I kept changing it so you like increase your leverage again, right? Okay, so this is looking like it's working. I mean, I'm not seeing any problems with it except for the ones I fixed. So, okay, so now that that works, I know you want to do this thing where we buy calls. For now, we'll just keep it as spreads.
call thing, the call thing is the thing is your rate of growth really, because we are cutting it off anyway, right? Either by profit or by theta. So the only difference is you're getting it cheaper. If you buy the call, it's going to be more expensive, right? There is really, if you buy a straight call, your return is going to be less because you're paying too much for it to begin with. This way you're saving 15%, 20% on the cost. And so that goes into your growth too. And basically risk reward, break point, everything moves in the right direction. That's why people like spread instead of just just call. And I think it's probably, I mean, we could have an option for the user to go to call, but I really think the spread is the way to go, especially when you're doing 90 days. That's that's going to, the whole thing is going to be a lot better in terms of risk reward.
Yeah, that makes sense. Yeah, I know we discussed this last time, the whole spreads thing. Okay, so we have here total return, take profit percent. What is the total return? How are we calculating? Current spread value, current buy price. Where do we get that from? Get last price. And sell. Okay, so current spread value and then cost of spread. How do we get that? Last buy price. That comes from here. So check take profit. Where are you getting that from? Last buy price, last sell price. But that needs to be per asset. Last buy price, last sell price, last buy asset, last sell asset. Those should be gone. So they're going to be different each time. Then get the last buy price for underlying asset. No. Last buy price, last sell price, last buy asset, last sell asset. Oh, actually, we do need those. So we'll go self dot last buy asset equals that. Last sell asset equals that. Now we have to find everything that mentions this. We have to clean it up.
If you wanna have, is it a set or is it, if you wanna set, you gotta say set parentheses. This is gonna be a, when you do it like this, it's gonna be a dictionary. You want a dictionary or a set?
Yeah, I want a dictionary. Yeah.
Oh, okay, dictionary is fine.
I love how you give me coding advice.
Yeah, no, because you said set, because just this stuff that I used to know.
Yeah. No, sets. We don't want sets because sets are immutable. So we want a dictionary.
Cool.
And also it's also kind of a different thing too. Because we want a dictionary because we want to say for this symbol, what was the buy price? For this symbol, what was the sell
Key
price?
value. You want key value, not just a bunch of values. Yeah.
Yeah.
Cool.
Okay, so we do that. And where else we mentioned last buy price? Okay, that's in check stop loss. That's all good. Take profit. That's all good too. Let's go self dot. Okay, so we have to set that. So we have to go by the spread. Where will you go here? Create spread. I think we're gonna have to go when was on filled, def on filled order. All right, cool. I think AI did that. That's pretty damn cool. All right. That was awesome that it just filled that in. Okay, so let me rerun this now. Made a bunch of changes. Key error SPY. Oh, so I should fix that. Rerun it. Okay, so buy spread. Good. Okay, we're getting some sort of error here. Key error SPY. Where is that? Okay, rerun this. There you go. Submit orders. There's the buy order. So 7-Eleven call at 5:46. 7-Eleven call at 5:53. Perfect. Okay, so submitting that. So far looking like it's working well. Next, before when we ran this, it was only doing one asset at a time. It was only doing SPY. So now if this back test goes well, this should do SPY and QQQ, because before it wasn't doing both.
But generally, you just want to do one, right? When you get a recommendation, you do one and then you manage it, right? So it's one at a time, basically, right? Or do they recommend like in baskets?
There's baskets. There's a basket of them because
Oh,
that's how
okay.
we get it from Seeking Alphas. We have a bunch of them that they're recommending.
Oh, okay, I see.
Yeah, so we want to be buying a bunch of them. So technically, we would probably have to have a fairly large account to do this. I guess that's why spreads would be good, right? Because then you don't need as big of an account.
Yeah, just whatever you're spending, that's all you need.
Yeah. Order object is no attribute action. Not to order dot side. Right, action. Run that. Here we got another crash. Why? It's not support item assignment. What? I don't know what the heck they mean by that. I'm gonna ask ChatGPT here.
So at any given time, how many stocks are going to be holding on this?
So the strong buy, I think, owns like 15 at a time or something like that.
Oh wow.
Yeah, and then that's not the main one. That's the narrow one. The all version, I think, can hold like 30 or 40 or 50 at a time. There's a lot.
Okay. Yeah, but see, the thing is, we wanna also be selective on those. First of all, they gotta be optional. They have option, right? So they gotta have option, and then probably we gotta put. I mean, the spread thing that we check, bid ask spread and stuff is gonna eliminate. So I mean, if it's 15 only, it probably good idea to go with the bigger one, or we can make it like having two options. I'll try both and see which one works in real trading, because there is no way to backtest it, right?
Yeah,
But we may not be able to do all of them. We may be able to do like half of them, and the other half would be either not liquid enough to trade or not have option at all. So
yeah, that makes sense. There's a lot of complications when you trade options, right? That's one of them.
So question with this alpha picks, any does any information tell you what the average hold time is for these stocks?
They don't tell you that. We can look at it. I know some things that they've been holding for a while, like Modine Manufacturing, they've been holding for like a year now at least, right? So the hold times can be fairly long, like a year, 2 years plus. I don't think I've ever seen anything 2 years, but it can be like at least a year I've seen. And like
Yeah, so
SXI, they've held for a while.
and I might have missed this, sorry. So what are you thinking about for position sizing right now then?
Well, this is for options, right? So I don't know yet. We haven't looked at that yet.
Okay,
Um, that is a very good question because we need to keep these positions pretty small.
right.
Otherwise, they're going to get eaten alive, or
If
like you're gonna need a big account for this, right? So I think they should be pretty small.
right, yeah, that's what I was thinking. I mean, if the market turns, I mean, and it's fully invested, we go to zero, right? So it's
Yeah, exactly. Yeah, I wouldn't want to use the full account. I completely agree with you on that.
got it.
So probably some kind of a scheme like we do for the rolling EMA stuff, that we basically have some cash reserve and take a percentage of the account, and we whatever that divided and see how many shares we can buy basically. So we look at how much we have money and what percentage, say like 75%, 50% of the account. And I think 50% is safe to keep 50% cash reserve. And then each person can change that according to their own risk-taking appetite.
Right. Yeah, I agree.
And then basically divide that amount, that's the budget, by the number of spreads, and then each would be, and then figure out how many contracts can buy with that. And then set a minimum of one contract in case it's big.
Yeah.
That's what we do on EMA.
Yeah, that makes sense to me. Something along those lines.
And
Although
then another,
I don't know if I would do minimum of one contract though, because we have so many stocks, right? That could blow your account if you have a very small one, right?
If it's too big, then you just don't trade it, right? I
Yeah.
mean, it's gonna be, if your account is small and it's gonna be like half of your account, then you just don't trade that one.
Yeah, I agree.
another approach would be selling bullish call spreads, credit spreads. If these stocks are going up, then we could just sell the calls that are at the money and then wait for them to go to zero. So it'd be kind of like the opposite approach. It might be profitable as well. I don't know how good their picks. You know, it seems like they're pretty accurate though, so it might be an approach we could take as well.
I mean, since they started, their picks have been very good, so.
Yeah,
We're also in a raging bull market. Let's keep that in mind.
No, but they traded through 22. They traded through a bear market and they still performed very well. Like if you,
Interesting.
yeah, alpha picks, like here, let me pull up their latest thing. This is their chart, right? This is 22, half of 22 they went through. So S&P was down. They were still beating the market, even in the middle of a in the middle of a bear market.
yeah,
I guess this isn't a big chunk of 22, right? So we don't know what happened before. Maybe they had a high beta stocks that got killed pretty badly before that. It's hard to tell because they started in the middle of the bear market, basically. It was June 30th, 2022. Let me pull this up. June 30th.
Yeah, that was effectively the bottom, basically.
Yeah, pretty close. Not fully the bottom, but
Yeah,
halfway to the bottom. Yeah.
this feels a little bit like the benchmark dressing, where they're picking a very sweet window for them to show their back test.
anybody would do that, right? They're trying to sell this thing. So,
Yeah, obviously.
Yeah.
I just want to point that out. Yeah.
yeah,
Yeah,
but yeah, definitely,
yeah.
it's they've been selective exactly. You're right. It's they've been very selective on where to start.
Yeah, we were like 2/3 through the bear market when they started up.
So they started like end of 21, the Q3 of 21, then it would look a lot worse. The whole thing would look a lot worse. But
Yeah. Well, the question is too, how would the relative performance do? Like, did their
also,
pick still beat the market? Because it is possible that they had some good picks that even in the middle of a bear market, they still beat the market, right? That is a possibility as well.
but then they would show that, right? They would want to make a point of that if
No,
that was.
not if they didn't start, because this is
Oh, okay.
actual trading,
Oh,
right?
okay. Yeah. If they started at that point, then it is what it is.
Yeah. I mean, who knows what they did internally? Maybe they like on purpose didn't share it with other people until a certain point. I don't know, right? Hard to tell with companies like this sometimes because obviously they want to make it look as good as possible. So yeah, that is definitely a bias. I 100% agree with that. And a lot of the names that they pick, they tend to be more mid-sized companies. Some of them have pretty high betas, like SMCI is a pretty, high beta stock. But yeah, that's definitely good. That's definitely a good point.
Do you know when they got out of SMCI?
I think they're still in
You
it.
remember?
I think they're still in it. I don't want to go into this because then I don't want to get sued by them or something,
Oh, okay.
We're gonna be sharing this video with a bunch of people and, so I don't want to go into that and actually see what their picks are, right? Like if you're a subscriber, then you can see their picks, but I don't want to get into this and then, one
Yeah,
day
okay, yeah, that's
I get their lawyers banging on my door,
okay.
You know what I mean? Like I've already had a couple companies do that to me, so I'm learning my lesson pretty quickly. Um, but yeah, so 2/3 through the bear market. So yeah, the timing is pretty good. That is definitely a very good point here. Okay, so I don't understand why I keep getting this error. Why is the last? No, that's wrong. Last buy price. Maybe because in here, that's why. Okay. Last buy price needs to be per asset. And then should be initialized also by this whole thing. Let's go last buy price, all that stuff should go into options helper. And then last buy price will go like that. This makes sense. I don't understand why that would. I shouldn't really mess with this at all either. This should be namespaced. What the hell is going on here? Yeah. Component system. I feel like we need to like improve on our component system a little bit. And Jack did a very good job with his component system, but he made it so complicated. It's kind of hard to decipher what the heck he was doing. So, but I feel like he did some pretty good things. Okay, underlying symbol in. There's no attribute. Okay. That makes sense now because his name is spaced. So we have to say check, take profit. So what I want to do is I want to take this and move this into options helper because this is basically saying check, take profit. Or what do we have in check, take profit? I want to move more and more stuff into our options helper thing. Take profit price, less buy price, let's buy asset, less sell asset. Yeah, why don't I we'll move all this stuff over to options helper. It's actually pretty complicated when we have to do spreads, right? As opposed to just buying the underlying. Spreads are definitely quite a bit more complicated to deal with because they have to deal with two assets as opposed to one, right?
If we only had just one simple function that bought the spread and just plug it in. I mean, the components are interesting, but if it's difficult to figure it out, then we just had a function that would just buy a spread.
No, that's not the complicated part. That's not the difficult part. The difficult part is tracking the take profits and all that kind of stuff. That's complicated.
So one function for that too. So
Yeah, that's what I'm getting it to. That's what I'm trying to get it to. That's what I'm working on for these things. That there's one function for take profit, one function for this, one function for that. But it's like, it takes time to build that, right?
yeah, sure.
Get last buy price. So this would be check spread, take profit, self dot options helper dot check spread, take profit for asset. Right? And then we'll go We'll make that here. Check spread, take profit for asset. Yeah, now I remember why. When you mentioned, you're like, why don't we just do this using Jack's algo? That's why at the time I was like, yeah, let's just do that. So like, this is pretty complicated. But I'm glad that we finished
Oh
up.
yeah, that was because we were doing exactly the thing that he already had it built, but this is different now. So yeah.
Yeah, sort of. I mean, he does have a lot of this built, right? So we are rebuilding a lot of stuff. But I don't really know how to plug in the alpha picks into what he built. So
That's what I'm saying. This is not easy to do with alpha picks. But what we were doing the other night that we switched to that was exactly ready to go on the config file. So that's why I said, well, and it worked, right? We got
yeah,
it to work. So, yeah, but
yeah, definitely.
yeah, so you're right. Yeah, that's what you remember. So, yeah, that's
Yeah, yeah. Yeah, because we started doing it for diversified leverage, and then yeah, that was easy to do it there. But with the alpha picks thing, it's different. At least I don't know how to plug it in like that. So go I'm gonna go like this. We'll make something called like acid filled or something like that. On filled spread or on filled order, I guess. We pass in position, order, price, quantity. Multiplier. And this just calls self dot options helper on filled order. It just calls that. Last buy price, last sell asset. Yeah, it's just trying to get a little. We'll have to like revisit some of this component structure because we use different components for different things for different algorithms, so it kind of gets like complicated in that way. Okay, check stop loss. So it's not mentioned at all anymore here. Perfect. Okay. Let's see if it still works now that I rip that out. It's putting more and more stuff into the options helper or the components in general. Yep. For asset. Why is this one assets? Run that. Okay, that's looking good. Check in the take profit. Everything looks great. Okay, there's some sort of issue here. There's no last buy price. Yeah, I was looking for that. And why did it? What? Create spread. So what is calling create spread? Why would that cause issues? Self dot create spread. No, it should be. Why is this even in self dot? That shouldn't even be possible in there. No, these are not in here at all. They should not be in there. That's why. Yeah, I thought I fixed that last time. That explains the confusion. Self options helper. Okay, fix that. Okay, this is much better. Self options helper. Okay, we got another issue here. No treat by spread. What are you talking about? Well, I guess it doesn't. Self strategy dot get last price. If I remember having to do this with a bunch of stuff. We go self dot get last price. That has to be replaced by self dot strategy. Yeah, ideally we have these things are very lightweight on the actual strategy, and everything is just in components. That's kind of where we want to get to. The log message has to be the same thing. Self dot strategy dot log message. Get underlying price. Move this over as well. Okay, get underlying price. And price is options helper. Get underlying price. A bunch of stuff we got to change here now that we split these up. Options helper does not have attributed broker. Self dot strategy dot broker. So many of these. Self dot strategy. Get Greeks. Nope, that's just one. Okay. Okay, that went a little further this time. Self dot strategy dot create order. And submit orders, and you do the same thing. Okay, making some progress here. Get quote. Yeah, we have all these different versions of options helper. I feel like I'm gonna have to like combine them, and we have to like figure out how to deal with this. Because now we have like 3 different options helpers all over the place. Okay, so looks like it's working now. All right, build order. Good. Stop for today. Okay. Okay, it's looking like it's actually running now. And it looks like it's actually trading QQQ. So I think we're actually going to get what we want out of this. It's going to trade both assets. Okay. We're going to keep running it like this with just SPY and QQQ. And then once we have that working, then we'll do the alpha picks. We can kind of introduce more things. But okay, do you guys want to take a quick break here? I'm gonna go use the bathroom, get some water. Sorry, I just realized there's some questions here. Ami says, do you use any libraries to code this? Yes, we use the LumiBot library. We use the LumiBot library. I'm just gonna, yes, LumiBot library.
Is the LumiBot library like a free, is it free or is that included in the plan?
No, it's free. Yeah, we made it open source. We created this thing, we made it open source. So you could use LumiBot anytime you want.
Thank you.
Yeah, no problem. Yeah, it allows you to do all these things. It allows you to connect to brokers, back test things. It like really makes that whole process very, very easy, right? Because a lot of times, like you'll back test something, and that's like really difficult to do on its own, especially if you're doing options or something like that. And then to run it live is also very difficult because you have to take your back testing and then make it go live. This allows you to go back test to live very easily, and it connects to a bunch of brokers and makes all this whole process very, very easy. You can trade different asset classes and all that. We spent a lot of time working on it.
And because I currently have been exploring MetaTrader 5, how do they differ?
MetaTrader is very basic. You could really only do like price action stuff. You can't really do anything complicated with MetaTrader. Yeah, so we can trade options, we can back test, we can trade based off of deltas and betas. We could use AI stuff. We could do all sorts of things with LumiBot. MetaTrader is just very basic price action stuff. Like I don't know that many people making like a ton of money with MetaTrader. Like it's much easier to make money doing this kind of stuff. Like here, this is a pretty crazy result. 2000% a year. I'd say that's pretty good.
Let's just do this.
Yeah, that's a pretty nice result. It's a short back test though, right? Like, so we'll see how it goes long term. But this looks like it actually did what it was supposed to do. So bot SPY and QQQ. Sold SPY and QQQ. Okay, so this looks like it's actually working, doing what it's supposed to do.
Is it
Perfect.
also selling?
Yeah,
Does
it's selling and buying. So it's doing the whole spread.
does it no? But I mean, does it take profit? Does it show any taking profit?
We still gotta go through the whole thing. I think taking profit, we have to now it's also just buying
Oh, it's not there
spread
yet.
every single day. So now we have to say, okay, if you already own it, don't buy it again. There's a bunch of stuff we have to add in. I think the basic mechanism is there.
It's working. Cool.
Yeah, it looks like we're good to go. Okay. So like I said, I'm just gonna take a quick break. I need to use the bathroom. I'm gonna get some more water, and then I'll see you guys back in like 5 minutes, right?
Cool, Rob.
All right. Hey, guys. Okay. So we had a good result here. It traded as expected. So the next thing I think we should work on is that this thing should not be buying every single day. It should only own a certain percentage of this. So we need to figure out how to make that happen. It's basically ignoring the whole weight right now. So weight, let's say we make weight something like 5% or something like that, or let's say 10%. And it should be listening to that. So let's make that work.
So what does this weight mean? It means the percentage of the cash in the account or value.
Yeah, that's what I'm thinking is that this would be how much of the account is owned by these options. And that, I mean, I think the only way that we can really calculate that, I guess there's other ways, but is what's the value of what's the cost of the spread, right? And then times 100, whatever, and whatever your account value is, right? I think that's the way it should do it.
Okay.
Right? Unless you have another idea, but I think that kind of makes the most sense, no?
Is there any way to check the account value? So
Yeah,
how much?
yeah,
Okay, so basically you want to check the account value divided by, say you want to be 50% of the account, divided by half and divided by the number that, but you gotta be at the stage that you know how many you're gonna be buying. So the number that you're gonna be buying, right? And
yeah. So the way that I would do it is I would get,
that will be your budget.
the value of the account times 10%. So say $100,000, $10,000, right? Is 10%. And then now you want to buy spreads. What is the cost of the spread? You subtract the buy from the sell. That's the price of one single spread, and then go $10,000 divided by that. And there we go. That's your
Yeah,
quantity.
that was, yeah. If it's 100,000, 10,000 divided, yeah.
Yeah.
That's
Right. So here it wouldn't be quantity. Here it would be create spread based on percentage, right? So we'll go create spread. Quantity. Quantity or percentage. I'm just wondering how to do this here because we can go keep create spread. Yeah, then we have to go create spread quantity, and then we'll have to make another one. Create spread dollar amount. Right? Because we kind of have to do that with this. Right? It's almost like a totally different thing. Create spread quantity. We'll go create spread to create spread dollar amount. And everything else is exactly the same, except it's dollar amount instead of using dollar amount to trade. Parameters. I'm gonna use AI to do this. I'm just gonna use ChatGPT because that'd be a lot easier. Okay, we don't need this. First steps. We'll go. Hey, sorry, I don't know, overfitting. I don't know if you know that your mic's on. I just wanted to tell you that we could hear you like typing.
Sorry.
No, I don't care. I just want you to know. It's like
Yeah, I appreciate that. Well, quick question. Did you ever end up checking out Cursor,
cursor. What's cursor?
the IDE?
Um,
Not
it sounds like a no. Right? What's cursor ID? Cursor ID. Let me.
so it's base. You could basically, it's got its own agent, but you can also connect either Claude or ChatGPT within it.
Oh, cool.
So they basically forked VS Code and then added chat functionality in it. So you can drop in your own API key and then you never have to leave basically VS Code.
Well, you could do that in VS Code right now. Like they do have that built in. I just don't use it personally. Probably should use it, but they do have that built into VS Code.
Yeah. But their own composer as well is pretty impressive.
Oh yeah, interesting. It looks very clean and nice.
Yeah, you might want to try it. I use it. It's pretty good.
Okay, well I'll download it right now.
Yeah, I've already built a couple apps just chatting with it very easily.
Yeah, you think it's better than VS Code with
Well, I mean, it's VS Code. It's a fork of VS Code, but just some enhanced capabilities when it comes to at least chatting with the different, um, you know, code. You can have Sonnet, ChatGPT, and its own composer, which they've been doing training on specifically on code. So I think it works incredibly well.
That's pretty cool. I mean, one thing that I really would like, and I guess you could do this with VS Code by just the first time I used it wasn't that good. It was kind of complicated, but like where you can give it your code base, right? Like my code base, and now like I could ask it questions and get it to like build stuff using my code base. I feel like
Yeah,
that.
Yeah,
that's
Cursor,
Cursor.
Cursor can do that.
Yeah,
Yeah.
it's amazing, quite frankly.
Okay, all right. Well, I got it now. I'll mess around with it.
Yeah, it's worth checking out.
Yeah, you can upload documentation and the code, have a chat and review the code base and the documentation. So it's really just great.
Okay,
Yeah, it's pretty convenient.
cool. Yeah, it kind of looks like VS Code here. I could see that.
Yeah,
So I'm not.
Yeah, I think it is VS Code.
it's
Yeah.
I guess there's
literally
a
a
fork.
fork. Yeah,
Yeah, because VS Code is open source, right?
Yeah. Yeah, I think you can also import all your settings from VS Code into Cursor as well.
Yeah, it just did that. It pulled on all my extensions. It's pretty
Mhm.
cool.
Yeah.
Check it-
Yeah, it's pretty
I'm
good.
not the whole process right now, but I'll sign
Yeah,
up.
check it out later. Yeah.
Yeah, that's cool, man. Thank you. Thank you for bringing that up.
Yeah, no worries.
Yeah, AI, like these days, like if you're not using AI to code, like you're just being left in the dust. Like it's such an unfair advantage. I was on Twitter and like there's people on Twitter that like are coders and they like refuse to use ChatGPT. I'm like, are you stupid? Like, what's wrong with you, man? Like, Jesus Christ.
It-
That's like saying
it's
you
just
don't want to use a calculator, you know?
yeah. You would think for being a technologist, you'd be open to using another tool, but some people feel a little threatened. I think so. That's fine.
Well, threatened and also a lot of people what I've heard, and I've actually spoken to people like this, and like people that code for us, and people have told me this, and they're like, oh yeah, I don't use it because it doesn't produce good results. I'm like, dude, it's a tool. Like
It's
a tool
exactly
is not going to be you have to learn how to use the tool. I
yeah.
mean,
It increases your workflow like 10x. That's all.
yeah, it's huge. It's
Yeah.
crazy. I swear to God, I do the job of like 10 people these days. Literally 10 people. You're right. Like 10 of me, back in the day. It's such an unfair advantage. It's crazy. But to me, honestly, this AI stuff, what it reminds me of is like every time that there's like a new framework that came out or something like that, like when Ruby on Rails came out, it was like, holy crap, I could build stuff 10 times faster, right? It's like when, good IDs came out, like there's so many things like this that have happened in code. Like, I don't know, I've been coding for a long time, so I've seen this happen several times, right? Uh,
I have yeah, it's I have friends that refuse to leave like PyCharm. I'm like, well, why?
yeah. Yeah.
What was that? Sorry, I missed that thing. What was that? Cursor?
Cursor, yeah.
Cursor.
Yeah.
Dot io or dot com, right?
Just search for Cursor IDE and it came up for me.
Cursor.
It's cursor.com.
Oh, all right, thanks.
Oh wow, they got a lot of money if they can get that .com. That must have been expensive.
Yeah, initially it was .sh. I guess they finally bought the .com.
They must have got a lot of funding. Rate spread, dollar amount. Where do we use this? Strike step size. Oh, okay. We don't need that. So here's a signature. Okay. Do your thing. I don't know if you guys have been working with O1 Preview and O1 Mini. It's like a lot better than what was there before in ChatGPT.
Yeah, I've been going back and forth between O1 Preview and the new Claude Sonnet. And, it's it's amazing. It really is.
Yeah, yeah. I haven't tried the new Sonnet yet either. Um, it's too busy doing other stuff. But Claude before beat the hell out of, O1, what was it, 4.0? Like
Yeah,
Sonnet was so much better than 4.0. So I was using that for a while, and then O1 Mini and O1 Preview came out, and I'm like, okay, well, time to switch back. So,
yeah.
so
At this point, I just I have a subscription to all of them.
same, same. I have Sonnet, whatever the company is that runs that again, Claude.
Tropic, yeah.
Yeah, yeah, Anthropic, yeah, Anthropic, ChatGPT, and Grok. I have all three of them.
I also have Perplexity as well.
I've heard about this. Do you like Perplexity? Is there's good things with it? I haven't had a chance to play with it yet.
So, yeah, it's Perplexity. You can kind of pull in a couple different models, several. So you can use um, Sonar, Anthropics, ChatGPT. You can use image models like Flux, but it also does. It has its own agents as well, and it does very good web search. So I like it more for research. getting quick answers because it'll do the web search, then check the language model, then its own agent will do some reasoning between the web search and the language model and then spit out what it does, and it's pretty fantastic.
That's pretty cool. So it's like it uses AI and then does AI on top of AI.
Yeah.
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 I use it a lot for it's basically like a web scraper. Like you can use it to scrape a lot of data off of websites.
Yeah.
It's
That's great.
yeah, it's really good for that.
Interesting. Yeah, web scraping is now like impossible to stop, basically. Like,
Yeah, it's
Yeah,
all
yeah,
yeah,
with perplexity, yeah, it used to be a pain, but
mhm.
now it's gotten so much easier with AI. It's like you can't stop it at this point.
Yeah, yeah. The amount of time that I spent trying to web scrape stuff and building like little, whatever you call those, like algorithms to scrape specific sites, and then they change them and they have to do it again. I spent so many
Yeah,
hours doing that, and
such a pain in the ass.
yeah,
Yeah. Yeah, perplexity makes it like 1,000 times easier. It's so convenient.
very cool. Yeah, I had it open. I just never, I don't know, I have a busy life. Like I'm trying to run this company, so I'm like doing, there's only certain things I could play with, but that's one of those things that's been open on one of my web browsers for a while.
Yeah, well, I mean, you don't really have a reason to use it, so, whatever.
I'm sure I could find a use case. Yeah.
Yeah. I like it for scraping data off of the crypto sites. Sometimes I can get uh more data than I can from the APIs.
Yeah, that makes sense. Yeah, I mean, if you want to web scrape, you could also use like ChatGPT's API and then just like give it the HTML. I'm sure it'd do a pretty good job with that too. But I guess it's just built into Perplexity. Is that what you're saying?
Yeah, I don't know. I don't know how it works. I just know it works better than a web scraper. Or yeah, it does things that a web scraper can't do. Or I've been able to achieve things with it that I haven't been able to do any other way.
Yeah, it makes sense. Oh, yes, that. Why is this different? Self, underlying asset, expiry, buy delta, buy right, sell delta, sell right, dollar amount instead of quantity, strike step size, and limit. Yeah. Oh, you know what? I know why. I know why. I didn't change this code. This one strike step size and strike seek steps we don't need. Okay, cool. Everything is always so much more complicated when options are involved. I feel like that's like one really major competitive advantage of LumiBot is that we're just like really, really good with options. There's, I don't know any other library that's as good as us with options trading. Like that's like a very clear competitive advantage.
yeah, I would definitely agree there, having tried just about everything out there.
Yeah, that makes sense. Yeah. Yeah, what I'm starting to think is like we're started up advertising again, and I actually really want to advertise more towards developers than anything else because we gain a lot of value. Like developers, first of all, they have money to actually buy our product, right? Because you tend to get paid more. But then also when you join our community, there's like a network effect that happens. So there's a lot of value with that. So I've been
Right.
thinking lately to like advertise towards developers and specifically say like we're very good with options, like join us and like really just double down on that. I've been thinking about going that route.
I think that makes sense.
Yeah. We'll see how it works. Yeah. I've been focused a lot on our advertising again lately. That's been kind of my what I spend my days
It,
doing.
I think it's a nice way for people to sort of like increase their sort of salary almost,
Yeah, yeah,
you know,
definitely. Well, you can
because you
increase
can,
salary in two ways. You could either do it using trading, or you can like get the skills and go work at like a hedge fund, which pays. I had someone reach out to me, by the way, on LinkedIn, and this guy's like, "Oh yeah, I have a job available that's $1 million a year. Are you interested?" I'm like, what the hell? Like, Jesus
for
Christ.
you, you, for
Yeah.
you, they offered you a job.
Well, they didn't offer me a
Hmm.
job, but it was like a recruiter, and he's like, "I think you'd fit this very well." He's like, "What do you
Oh,
think?"
maybe it's a scam. There's a
Uh,
lot of those like job recruiter scams going around out there,
it's
and they
possible.
just want you to like, they want you to send them like a ton of information, and then you know, halfway through you realize that they were just trying to, it was just a scam, and they're just trying to get information out of you.
That is possible, but it's also not very far-fetched for a hedge fund. Like, that's not a crazy,
It's not,
yeah.
it's not.
Yeah.
No, no, no. They pay that kind of money easy because it's like Jim Simmons used to pay a lot, more than $1 million a year for their development because they're valuable. They're
Yeah.
making billions for them, so they don't care if you and they give you $1 million, you make them 10 billion a year. That's worth it, right? I mean,
Yeah, exactly.
this is a very, very
Yeah,
specialized skill. It's very valuable. This stuff. So.
yeah. I don't know. I've heard a lot of horror stories though about the industry, um, as
What,
well. I've heard a lot of bad stories.
what have you heard?
Um, like, you know, say like you take a position like that and then you start making like ridiculous amounts of money. And, you know, you say you want to quit. And now you're not allowed, they, you know, they don't like let you. They won't allow you to, or they try to bully you or pressure you into doing things, you know, because you're making
Effective.
like, you know, you're potentially making like millions of dollars, you know, or you know, whatever a year. You know, they don't want to see that go, you know, and they're probably going to they try all kinds of coercive tactics to, you know, get you to change your opinions.
So are you
What the
joining a
Jesus
gang?
Christ?
Are you joining a gang or something?
Is that even a number? That's not even a real number.
This
It's a
is
short
good.
back test. It's,
Good.
you know,
It's just a couple of days, right? So yeah, I mean, it's just extrapolating. Very,
you
very.
do this once and you never have to work again for do this once for a week.
Yeah, that's why they give you $1 million.
It's ridiculous.
You're hired.
Yeah, exactly right. Oh man. Yeah, obviously this is not real. This is a very short back test if I mean, but crazy thing is, like with options, I've heard of people that with options, like they make one good bet and like you could retire off of that. Like in a week, like you bet on like earnings and you buy like out of the money calls and you put a good enough amount of money into it, earnings go your way. Like for example, Tesla shot up 20% in a day recently. Like if you had owned out of the money calls on Tesla before those earnings came out and you put in like 20K, you probably would have made like $2 million. You know what I mean? So it's not that crazy, right? But chances, you're probably not going to hit that. It's like a lottery win, right? Um, but yeah, that's a pretty crazy number. That's a very high percentage. In terms of the hedge fund, I've actually heard similar, and that's one of the reasons why I never went to go work at a hedge fund, is because they put the golden handcuffs on you. That's what they call it, the golden handcuffs, because they'll pay you a crap load of money, but you can't really leave, right? Because if you
Well,
ever leave, you can't work at any other hedge fund ever again.
yeah,
You're
that's the thing.
locked
It's the
in,
contract. You basically sign your life away. If you leave, you're done with the industry for the most part.
basically. Yeah. Exactly. And the reason, so I actually met someone in New York and I was like, oh, I kind of want to do hedge funds, whatever. And I met this guy that was one of the original founding members of Two Sigma. If you don't know what Two Sigma is, look it up. It's one of the biggest hedge funds in the world. And this guy was trying to start his own hedge fund. So he was looking for a CTO. And, we went for a bunch of dinners. He bought me a bunch of nice stuff, which is cool. But ends up he wanted me to be a CTO, but we couldn't actually do this because his lawyers or the lawyers from Two Sigma were just on his ass like crazy. Even though when he was leaving, they said, "Oh, it's fine for you to start your own hedge fund. Everything is cool." As soon as he left, they're like, "Nope, that's not cool." Basically sued him into like not being able to do anything.
Yeah, I think Wes McKinney, the guy from he was at Two Sigma, Pandas, right? Yeah, he didn't wasn't he crucial in implementing the Pandas package
Okay.
or the book anyway?
Okay. Yeah, I don't know who made that. I'm not that, you know. I know a lot of people that like know all the people and yeah, what they did. I don't know that stuff that well. But cool. So he made pandas. That's pretty big. I mean, that's a one hell of a claim to fame.
Yeah, he did Pandas and Apache Arrow, but he worked at Two Sigma.
Wow. That is, you definitely know what you're doing if that's the case. Arrow. I heard Arrow is actually pretty good too. We are thinking about swapping pandas for Arrow in what we're doing here in Lumibot, just because Arrow is supposedly a lot faster, right? I think that's the Arrow you're talking about, right?
Yeah. Yeah. I mean, I have feelings about that. I know Pandas isn't the fastest, but it works.
Yeah. Yeah, I'm just thinking of like how do we speed up our back testing, and like we've kind of hit all the like low hanging
Well,
fruit. Yeah,
yeah.
now we're gonna start like gutting things to make things faster, and Arrow is one of those things that can potentially give a pretty big speed boost. But what I would want is I would want that if you're using Lumibot, you could use pandas. It looks like pandas to you, but behind the scenes, we're using something faster, right?
Got it.
Yeah.
Well, I mean, if they ever release the upgrade to Python, which is supposed to take care of that, I'm not holding my breath though.
Upgrade to Python. What upgrade?
The next release of Python, Guido's been talking about it for a while. It's supposed to have several factors increase in speed and so
Ooh,
on.
that would be
Who
awesome.
knows?
You know what? They did this with JavaScript. JavaScript back in the day was super slow. No one wanted to use it, whatever. And then they came out with what was the JA engine or whatever the heck that thing's called. And it's now JavaScript is like as fast as C++, like crazy fast. That changed the game for JavaScript, right? You needed to do it because of web browsers and whatever. But if you do the same thing with Python, I don't see why not, right? If you could do it with JavaScript, why can't you do it with Python? If you can make Python as fast as JavaScript, that's why would you ever use any other language? You know what I mean?
Yeah. So Guido Van Rossum, I guess he got knocked around a lot from Python's 2 to Python 3. And that wasn't the easiest and smoothest transition. So he's sort of just kind of stepping away from the idea of just upgrading to Python 4. But who knows? Him being the benevolent dictator of Python.
Yeah. I mean, if you can make Python an order of magnitude faster, that's like a game changer, you know? I mean, I would screw it, whatever. If a bunch of libraries don't work, I don't care. I'll upgrade our library, whatever we got to do, you know? If you can make it 10 times faster, like that's a huge difference, yeah.
Yeah.
Yeah. I don't know if you have to go Python 4 to do that. I mean, there's definitely gonna be breaking changes. You're gonna have to break stuff to make that kind of a speed improvement. But
Yeah, I mean, from Python 2 to Python 3 broke just about everything. So
yeah. Yeah, Python 2 is so long ago. Okay, so dollar amount, I'm just trying to think this through here. So I think we have this thing working, but then now we need to check if we own the spread already, because actually let me run this whole thing. Let's make sure that the whole thing runs. Actually, no, we did run it. This was working. Okay. Yeah, so the problem is it's still buying every day, or here it did not buy. but it's buying pretty much every day, and it should not be doing that. It should only be buying if we do not own it. So we'll go check. Positions, positions, check if we own a spread for this asset yet. For underlying symbol params, assets to trade. No, actually, should be in here. Check if we own any positions for underlying asset. Position to asset symbol. Already own positions, skipping. Okay, now this should. I think we're almost there. Once this works, then we can mess around with this a little bit, and then we plug it into the seeking alpha positions, and we're good to go. There's also stuff that that Jack built that's like legging into things. There's some other stuff that we can do to improve on that. But I feel with seeking alpha, that kind of naturally happens a little bit because they declare things every 2 weeks and their positions change. So less of a crazy return, still very high. This looks better. So yeah, I bought here, and then when it expired, cash settled. Okay, so we don't actually sell it yet. And then we buy again. Okay. So we're getting closer to where we want it to be. Okay. So now the next thing is we need to sell at that expiration time, right? So days before expiry to sell. I'm going to add that into here. Days before expiry to sell. Okay. Check if we need to sell any spreads because they're close to expiry. No, let's actually do this. We'll go positions, can go back here. The position and underlying asset to trade. And params. Underlying asset trade. Days before expiry to sell, good. Sell spread. Let's call this sell spread, period. But if we're going through positions, then there's going to be more than one. Right, so Okay, later, Omi. All right, so we need to, okay, so we go through this, days before expiry, sell. Check. Position at days to expiry, no. Asset equals position on asset. Days to expiry, and then calculate the days to expiry. Well, if days to expiry is less than days before expiry is sell, selling spread, and then it goes option sell for sell spread. Symbols sell. We'll add symbols to sell if it's not already there. Okay, and then we go and sell spread for asset. Okay, and then we need to make a function called sell spread for asset. Actually, I think we should make it a little different than this. It's a little bit complicated. Symbols to sell. Symbols to is now we're going to need to know what specific assets. So actually symbols to sell should be more like a dictionary. No. The asset. Symbol and symbols to sell. Yeah, we go close position. And that might take a little while to fill. So we might have to track that, or at least we'll go sleep. We'll go Actually, we should pen position. Position, because we need to know. Then we need to know, do we sell or buy? If the position quantity is greater than 0, then sell it. We'll go create order. Position dot asset quantity action, no side equals sell, or type equals market. Doesn't go there. Order dot submit order. Then if okay, let's see if this works. It was a pretty complicated thing here. All right, let's run it. So basically, when we approach expiration, we're going to sell this thing. Okay, there we go. So now we're close to expiration. So days to expiry is 3. Current date is that. Expiry is that. So 7/11 and 7/8. So days to expiry is 3. I don't know why I let it get so close to the expiry. Oh, because we did set to 5. Okay, that makes sense. It's probably a weekend. And then now positions. We have these two positions, the negative and the positive. Perfect. So then we're going to go submit order for the positive quantity one. So here's the order. You sell that. Cool. Sleep. And then we buy that. Sleep. Move on with life. And then we do this also for QQQ. Do that. That. Then we move on. Yeah, why is this thing stuck? Oh, there you go. Okay. Okay. So now we went buy, sell 10 and 8. 10 and 8. Okay, cool. And then we sold it here, or we closed it out, and then we entered into another one a minute later, or or an hour later. Okay, so this is looking good. It's looking like we're doing what we're supposed to do. I don't know if the take profit part of it works, but this seems like a pretty good mechanism.
So the sale was because it went to 90 to 2/3 of expiry or half, whatever you put.
Well, I mean, this is arbitrary right now. I set it as 10 days and 5, so it's half, but
Okay.
we'll change that when we actually do this.
Sure.
Right now, it's kind of just like testing stuff to make sure all the mechanisms work, and then we'll like actually plug in seeking out the stuff.
We got in a very lucky time frame though.
Yeah, definitely.
That those few days are pretty good.
Absolutely. Definitely agree with that. That's the thing with options, right? Like you get it, you don't need to get it right that many times, if you're making big bets,
65% you'll be a billionaire. I mean, you can do the math and figure it out. If you consistently do 65%.
Yep. Yeah, we don't need symbols. I'm going to put this. Okay, and then the other thing is to take profit. Take profit. Check spread, take profit for asset. Let's see, is that going to work properly? Last buy price, last sell price. This is not going to work properly. Oh, actually that will. And then check spread, take profit. Well, that actually should work. I think that makes sense. Sell all positions. No, this is not sell all positions. No. Close the spread. No, not sell all. Yeah, that's where it gets more complicated here because we need to know. Check if we hit the take profit percentage. Get the positions for last buy, last sell assets. Yeah, that's good. And check. Okay. Equals. Where's that? Okay, so I think this will work. This is for take profit. So we should set the take profit to be something much smaller. So you set take profit to like 5%. Let's see if this mechanism works. So now we'll have take profit working, we'll have the sell expiry working. Now that all those work, then we can start introducing different assets. We can check all this stuff out. I think we're almost there. And then the thing is that this is hard to back test, right? So you'll come up with some way to back test this without, going all the way. And then we'll swap in seek alpha picks, and then I'll run this thing. We'll see if this thing actually works. Okay. That's funny. It makes such a high return percentage, but it doesn't have a take profit. That seems unusual. did not hit take profit despite these big numbers. So I'm going to run it for an extra month. And then I run, let's see how this works out. Okay. And while this,
Something I think something wrong. It's gonna take. I mean, you put only 5%, right? It's going
yeah,
a lot. I mean, they're going a lot higher. No, it's something's wrong.
yeah, I feel like something's wrong too. Yeah, I agree with that.
It's gonna take a while.
Yeah, it should be taking profit. But let me just in case I'm going to run it for a longer time period, just to
Cool.
see. Okay, and while this thing's running, I'll be right back. I'm just going to get some more water.
All right, cool.
All right. Hey guys. This looks a little bit more in line with what I would have expected. You know, you have the big ups, but you also have the big downs. Makes a little bit more sense. But it still seems like the take profit was never hit. So we're definitely missing that component. So let's figure out why the hell this take profit isn't working. So take profit percent. Let's put some things here to check out what is going on with this take profit thing. For some reason it's not even being called. That's weird. Check spread, take profit for asset. Okay. Check spread, take profit for asset. Okay. If asset, SPY, and last buy price, which it should be. Actually, I guess we go asset dot symbol. That might be the reason why. Asset dot symbol. Asset dot symbol. This might be the reason why it's not working. So maybe it was cut off here. Okay, let's rerun this. Yeah, once we have this take profit thing working, then I think the only thing left is to swap this out for swap it out for the different symbols, and I think that's it. And then I can run this and we'll see how it works in real life. Because again, because we can't really back test that whole thing. Okay, there we go. Now that actually worked. We go here. Oh, there's something that crashed. What was it? Oh, again, asset dot symbol. All of them are switched to that. Symbol, 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 symbol. So I wonder why it even did that. Okay. Try this again. Okay, and now we're actually going into here. This is good. All right, another crash. Why? Add marker. So let's check any of these. Only one. Okay, self dot strategy dot add marker. Okay. Rerun this. And it looks like it's actually going to take a profit, which is good. We'll see how that works. Okay, get positions. Then we create the orders to sell. Why was there only one? That's strange. That should not be the case. So 8 and 10, 8 and 10, and then this one is only 10. A call. Why? This is actually pretty complicated. Every time we make these new option algorithms, I feel like it's quite complicated to do that. And once we have this, we can modify it like crazy. We could do a lot of stuff with this. It's actually pretty exciting to have this new paradigm, you know?
Yeah, it's pretty neat because of the multiple positions at the same time.
Right, exactly. Yeah. That's what makes it like a lot more complicated, right? Okay, so adds that. Then why still something weird going on here? Yeah, because that's actually pretty complicated to run like multiple assets at a time. You have to like monitor like which asset is doing what, and then you have the spread, and there's two options per each one. There's a lot of complications there, you know?
Definitely.
Okay, so this is negative 10 shares. What happened to negative 1 shares? Why did that not go through? Let me actually check this. Okay, last SPY asset is SPY. No, that doesn't make any sense. Why is that a stock? No. No. Okay, I know what's wrong. What's wrong here is this part right here, filled order. Make sure that the asset is an option. There you go. I think that'll fix it because it's looking at the actual underlying. It's the SPY that purchased, but it's also something that we did new in our. So the change that we made to Lumi bot that's actually affecting a lot of things. We made this whole thing around like multi-leg. So it makes it look like it's actually buying the stock when it's not. It actually should be. Actually, let me message this guy because this guy made this change, and let me message him about this. Hey, by the way, I'm seeing something weird happening when placing multi-legs. When the fill comes in with back testing, it looks like the multi-leg is a stock. Have you seen this yet? E.g., place a multi-leg spread and look at the fills in the trades chart. Okay, let's see if you could do that. Either way, we're checking for it. I think that's something that we should improve on. Okay, this is good. There we go. Now that worked. And now we have 2 orders, 10 call. Okay, so we have a position of 10 shares, 546. So we need to sell that. Sell 10, 546. Okay, perfect. And then we need to buy back 553. 10 shares, 503, buy back 10. Okay, perfect. This is working. Okay. So it looks like our take profit is working now. Let's see how this back test gets treated. And then once we have this, now it's all about just passing in different assets. Because we have here weight, strike step size, buy delta, days to expiry. Yeah, we could just set all of that and just pass that in. Underlying assets to trade. So basically these need to change. You change underlying assets to trade. And that's this right here. So basically we just have to swap this one thing out for seeking alpha. So there it is. Download alpha picks, download and rebalance. So this all needs to be inside of rebalance portfolio. So if we put rebalance portfolio, it's calc portfolio drift. I don't think we need that. So we're not going to be doing a portfolio drift thing here. We just buy it, and then if we still own it, we keep it until it expires, and then rebalance. It's going to be a little different. So basically this whole function here, download rebalance, download alpha picks. So far it looks like it's doing something. We'll see if it's actually taking the profit. We'll know that in a second. And then if that's the case, then now we just have to go, we have to take this whole thing. We have to go time to create spread, take profit, limit. So let me pull all of this out. will turn this into a stand function called calculate trades.
That was cool.
Yeah, it is pretty cool, but it didn't do it right though.
Oh, not so cool, but
Yeah, usually it does a better job than this, but it's missing the inputs. Makes the underlying assets to trade. Oh, it's getting it from there. No. There we go. That makes more sense. Underlying assets to trade. Okay, yeah, that's cool. That makes sense. And then this, shift that over. There it goes. Self dot calculate trades. Okay, and then we'll see if that still works. And if that still works, then we can swap in the different things. And then I think we're pretty much done. Okay, so there we go. So it's following. Okay, and then take profit, take profit, take profit. It's taking profit quite often. Okay, that's exactly what I would expect. 100%. Yeah, this looks like it's still working. So it didn't destroy it. So now let's pull in these alpha picks functions. So now we have to pull in download and rebalance, calc portfolio drift. We don't need that. Rebalance portfolio. We don't need that. Sell orders for assets not in portfolio. We don't need that. Yeah, we have to make a bunch of assumptions here. Right? Basically, when we add something, it stays in there for a while until it expires. If it changes that portfolio, we're just not going to do that. I think that makes it a lot simpler.
Yeah, I mean it can. I mean, if it's not in the list again, you just don't buy it again, but you just let it run its course, right?
Yeah, exactly.
That probably is, that makes sense. I mean, just cutting it out, it might not be the best action at that point.
Yeah, exactly. It's just to keep it simple, right?
Yes, yes, yeah, for now, yeah.
Yeah. Okay, so it still worked. Awesome. Same result. Perfect. Okay, so we refactored it and it was still good. Okay, API URL, API key. Where do we get that from? I think we'd probably call that alpha picks. Should refactor that here too. Rename API key, alpha picks, API key, or API URL, then AP. And then I'm gonna move this over because these API keys are sensitive. So I'm just gonna do this on another screen for a quick second. And I'm gonna copy this thing. P. All right, move this over again. And this is going to get from here like that. Download alpha pics. And then weight step size. So we're going to have to change the way that that works. We'll call this setup 1.py. And we'll take all this, but this needs to be different. Now weights need to be, I'll go with something like max weight. Said like 25% is the maximum number of weight for all options. Strike step size, we don't need that. Strike seek steps. This is all this complicates it a lot. This could be kind of a problem. I don't know if we're gonna be able to get this whole thing done today, just because it's one thing. Because we're gonna have to.
Oh, the delta, right?
Not the delta. So for every symbol, you have different. Like SPY is every $1.
Right.
SPX is every $5. Different assets are gonna have different dollar amounts. So I don't know. We're gonna have to pull the actual chain, and then based off that chain, do this. So there's still some work required here.
But we don't do back testing, so anyway, so we just have to check it.
Yeah, I agree.
So we won't have that problem. But yeah, I guess that's gonna be maybe next week.
Yeah, this is. I'm gonna keep going. It's almost midnight. But I feel like we're getting close to being done, but maybe we need like another hour or two of this because yeah, there's like that complication kind of adds like an extra, maybe 30 minutes of work, and there's a few things testing it. There's a bunch of stuff. Base expire before sell. Buy delta, sell delta is all going to be like this. So weight, step size, days to expiry. Buy delta, sell delta, buy right, sell right, and then days. Okay. And then underlying assets to trade. We'll just call this assets to trade. Or actually, we'll call underlying assets trade. Why not? Call it SPY QQQ. So we're changing this. We're going to use setup 1. Yeah, this is a pretty complicated algorithm doing this with options. it's just using live config. Okay. Actually, we'll call this spy QQ. We could still keep it the same. And then import requests. Yeah, let's calculate trades, underlying assets to trade. So now that's different. Yeah, we're gonna have to change this to pull from underlying assets to trade. No longer gets it from there. Params is different. Days before expiry sell. So now this needs to be an input, basically. Get rid of that here. Yeah, weight has to be an input per asset. So actually it's going to look more like this. Actually, just pull what we had with seeking alphas like this. So symbol, portfolio, weight. So symbol and weight. Go symbol, weight. And then symbol, weight. It looks more like that. That's what we want. Okay. That's underlying assets to trade. Okay, so we're good there. There's gonna be a lot of stuff we gotta change across the board. Okay, so we do that there. I'm gonna change like a bunch of stuff here. Like underlying symbol and underlying asset trade symbols. Loop through the underlying assets. So wait. And all these other things, these need to be inputs. Strike step size, seek steps, that needs to be determined. Buy delta, sell delta, that needs to be in here. Buy delta, sell delta. Days to expiry, buy right, sell right. Days to expiry, buy right, sell right. Okay, there we go. Let's calculate trades. And then strike step size, start seek steps. Those are both gonna have to be, we have to get those in a different way.
Bro, how often do they publish this? How often you get the data?
From Seeking Alpha,
Yes.
they, I think every 2 weeks they put out a new pick.
Every two. Okay, so that's, you got a lot of time to process, I guess. you know.
Okay, so we have that. And then now we need to get these strike seek steps and whatever. This now has to be done differently. So let's see if everything works up until this point. If everything works up until this point, then now the next thing is we need to get the chains. And to be honest with you, I feel like we need to do this across the board with different things. Buy plus. What are you talking about? Buy plus.
So
Right.
you have to get the whole chain or just filter certain portion of the chain.
Well, it just returns the whole chain, so we might as well just do that,
Oh, I see. You have to get that, and that's all it gives you. You can't filter it.
Well, when we get it, we can filter it, but usually brokers just return the whole thing.
I see. Okay.
Right. So and the chain is actually useful. Like what we do is we do this like seek steps thing and we kind of like fake it. But like we should just get chains and use that. Like that's a lot better way of doing it.
Yeah, that probably more accurate.
It's more accurate, it's faster. There's a lot of benefits to that.
Yeah, I mean the only thing that sometimes it skew our work is this back testing requirements. I'm worrying about back testing time and things like that.
It would actually
And
speed up backtesting.
say again,
It actually speeds up backtesting usually.
to do the whole chain.
Yeah. Yeah, because you get the chain and then you know exactly what's in there. You don't have to guess at what strikes are available and all that. Like it's just given to you. So it's easier to do this stuff actually.
So why don't we do it then?
We should. Yeah,
Okay.
that's kind of my point is that we should be yeah.
Sounds like we should, yeah.
Yeah, it's something we should be doing regardless, right? Right now we're kind of forced to do it because when it's these different asset types, like we just don't know. Like it's
Yeah,
so
so all this struggle that Jack had to try to do, so that would resolve that too, speed that up too.
no, he's already using it. Like,
Oh,
that's
he's
what-
already doing a chain.
yeah, he's already doing it.
Oh, okay, cool.
No, is back testing equals true? Let's see if this works. Yeah, I don't think we're gonna be able to get through this whole thing today, unfortunately.
Yeah, it's getting late too. So
Yeah, it's
yeah, I
getting
think this is really worth. I think this will be very useful for
yeah, once we have this, then we could do a lot of other stuff with spreads, like this is like a really complicated spreads algorithm, right? But once we have this, then we could do all sorts of other stuff, right?
plug in anything. Yeah, we can plug in any kind of any kind of list of
Yeah,
assets and stuff. So yeah, that's cool. Yeah, it's worth to do 2 weeks. I think on that. My opinion.
yeah, and honestly, when we do it, if you guys want to do it next week, then I don't think it will take that long. I think next week we can probably knock this thing out in like an hour or two. Like I'm starting to slow down right now.
Yeah.
But next week, an hour or two, I think we can finish it up. And this is a 2 week algo. We don't have many like that, but this is definitely one of the more complicated ones.
I'm good with that. Quick question. Did we ever get a grid bot
We do have,
live?
yeah, we do have a grid bot. I'm not running it live, but there's one in our GitHub.
Was it paper traded?
I have not paper traded it yet. No.
Okay. And what about the options rolling strategy?
That's one that it works right now, but I really want to upgrade it because and I actually started working on it, like upgrading it. That's one that like when I get back to algo building mode, right now I'm in like marketing and raising money mode, right? Because I was trying to get our business to the next level. That's where my headspace is at right now and will be at for the next few weeks. But when I get back into algo building mode, then that's one of the main things I want to do. I want to do this rolling calls algorithm because I made a few upgrades to it where basically instead of it buying and then just waits until it expires, buys another one, and now it buys periodically. So it'll go like buy this week and then buy a few more next week and a few more next week, that kind of mechanism. That's something that Jack did. And I'm kind of borrowing from his idea. And then it could also do things like selling like doing like covered calls, like that sort of thing. Like the rolling calls thing is something I really want to improve on a lot.
Yeah, I think there's a lot of opportunity there. One small suggestion in terms of closing the options, probably 7 days before expiration is likely ideal so you don't get the theta crush. Just a thought.
Yeah, I mean, definitely. I don't know if 7 days is the optimal or not, but definitely
It's
not hold to expiry. That's for damn sure.
yeah, about 98% of the theta decay comes after or 7 days to expiration. So
That sounds about right.
yeah,
Depends on what is the expiration though. It's gonna be a ratio of the whole. It's not 7 days. Is if it's like a 1 week option, then depends on when your expiration is coming. It's there. So the 2/3 that we've said is pretty optimal. I've done a lot of experimenting with that. So we just 1/3 of the expiry, we just sell it, and that's the optimum thing that we came up with after a lot of practice.
yeah, I'm happy to test both. I'm just generally talking about anything that's 30 or 45 days longer to expiration. If it's working,
yeah,
if it's working well,
generally I think this 2/3 thing, the 1/3 would work in all cases based on what we've done 1 month, we've done 60 days, we've done 90 days, and that 1/3 is rather than just give it some number of days, I think that would be very optimal to do 1/3. So
understood. I'm happy to test 7 days too, though, just based on my experience.
yeah, let us know. Yeah, let us know if you find something different.
Yeah, that's a pretty easy one to test. We can try 7, we could try whatever. Like that's really easy.
Yeah, yeah. Just that's the point, right? Let's back test and find out.
Yeah, exactly. What is this underlying symbol? Symbol equals whatever. We have underlying symbol here, underlying asset dict, underlying symbol. Yeah, there we go. And then now we go like this, then we go chains.
But yeah, you're right. I think the 2/3 works well if it's a very, very short dated option. Obviously, that makes more sense.
No, I mean, if you look at the theta decay and a lot of things that have been written about theta decay and all that stuff, there's a lot of books that talk about these things and stuff. It takes 1/3 is pretty much when it starts to really, drop real fast. And then you can sell it and then you buy it again, right? I mean, if it's still a good buy it again, you refresh your delta, your gamma is gonna be pretty good shape. So accelerates your growth and everything. So yeah. And then I did a lot of back testing myself on these EMAs, and it was all confident. But you can if you find some data that's different, if there's a certain ratio that works a lot better, let us know. We'll check it out. It's not a problem.
Well, it works very well if you're holding not the indexes, like say individual names going into earnings. You're getting
Oh yeah, the earnings and stuff is separate. We're talking about just this
right.
spread.
Yeah.
If you're talking about earnings and stuff, yeah. If going into earnings is very risky thing. A lot of people don't even buy it when it's gonna hit earnings. That's you're right about that. For individual stocks, earning should be something that you consider. But for this purpose of this, because we are just going by the recommendations, so instead of just buying a stock, we are doing the spread. I don't know, man. We can check it out to see if we have to do something about the earnings, but right now he wants to just get something going and check it. But yeah, earnings is a big thing. You're right about that. Earnings is something that you gotta consider.
Okay, all right. So we got back these chains, whatever. I think this is probably a good stopping point. Because then from chains, we're gonna have to like change a bunch of stuff now based on get chains. I think this is a good stopping point right now. If you guys want to continue with this next week, we can do that. I think we could probably I think we'll probably finish this in like an hour or two. That's what I think.
Sounds good.
Yeah.
Great. Yeah, this is gonna be good. This is gonna be a very useful thing, and we can. I mean, I'm gonna do this once we get it optimized. I think this is very promising, and then we can actually use the same thing for doing other things like you were saying, Rob. So
Yeah,
So-
absolutely. A lot of this is reusable, right? Because everything is inside this options helper. It's reusable code, right? So if we want to do other stuff with spreads, we can do that. Like there's all that stuff available, right?
I mean, you can actually do something that, just take part of this that doesn't have to be seeking alpha and just make a bot for somebody that plug in a list of things and it just does it for them. So if somebody wants to trade something and not do all the trading stuff and going to broker, it's just, you just want to trade and have a good algorithm that does it for them. They just manually enter what they want.
Yep.
And then you can use that as a function for using for any other thing that you want to add to it. That'd be great to have that. For
Yep.
me, it would be great. That helps me for my trade. So
Yeah,
yeah,
I
good.
do think it's useful. We could also plug it into like other things that give trade recommendations. Seeking
Yeah.
alpha is one of them, right? Like we can do all sorts of other things like that, right?
Yes, Zach has something. I think Zach has some kind of API too. And Zach has very good recommendations too. So, yeah, awesome.
Zach trading signals. Something like that. What is Zach? Zach's trade? Something like that.
Zachs.com. Yeah, Zach is very, very well known there, all over the place.
Zach's trade, Zach's investment research.
Yeah, that's the one. Yeah, these are the ones. These are the ones that I read a lot. They're
Okay.
pretty reputable in terms of they're not biased and stuff like Motley Fool that actually partners with people and then recommend them and things like that. These guys are pretty reputable.
Yeah, Motley Fool is a little over the top.
No,
Every time I read
they-
their thing, I'm like, Jesus Christ, like this sounds like such a scam.
The
yeah,
next 10,000% winner.
Yeah, exactly. You know, like, yeah,
no,
yeah.
they're crazy.
The stock that's gonna crash everything, like it's all so crazy, you know, like
they take your money and then also they partner with the companies that they recommend. So
that should
it's
be
really
illegal.
terrible.
Sounds like
It must be
straight
illegal.
Yeah.
They were recommending this lemonade insurance thing that, and it's almost going bankrupt. They have recommended so many things like this, and it shows that they come talk to the CEO, and there is a relationship there. You can feel when they interview CEOs and stuff. And that's, that's not, and these Zach people, they're pretty reputable. I've never seen anything like that from them. So,
Yeah. Well, I
anyway,
own one of these. I own Palo Alto Networks, so I bought this because Pelosi bought it. I think our Pelosi bot owns it still. Let's see. Pelosi bought Palo Alto Network. So I don't see it in, oh, there it is. Yeah. See, Pelosi owns it right now.
that's a
Palo
good
Alto
one.
Network.
That's a pretty good company. Yeah.
Yeah. And Zach's recommends it. So that gives me a little bit more confidence in them. Yeah, Motley Fool, like I didn't know that they're doing all this shady stuff like that, but to be quite honest with you, reading their stuff, it just seems that way, you know? Like it just seems so scammy. I'm like, there's no way this is like real. It just you just get that feeling from them, right?
Yeah, they just show you a couple of things that recommended that has worked, right? And all the other things that they have recommended that hasn't worked, they don't talk about that. So that's very simple. You give a list, 100 stocks, so 10 of them are gonna work. I mean, so
Yep.
yeah.
Yeah, definitely. I agree.
All right, man, get some rest. Thanks very much.
Yeah, thank you guys. Yeah, it's
Good job.
too bad we
Like
couldn't
always.
finish this thing today. I wish we could have, but this is, it's gonna take another like 2 hours. I'm like, honestly, I'm getting tired. I'm sorry.
No, you
Get
did a
some
good
rest,
job.
Robert. Have a good night.
Like
That's right.
always.
Yeah, just take a break and then, look at it with fresh eyes and,
Yeah.
next week or whatever.
Yeah, we can. I think we finish off next week. It's really this chains thing. This is going to be the main thing, right? So that we need to make it work with all these different symbols. We'll test it with different symbols. We'll get all that stuff done. But yeah, I'm quite confident that we can get this finished in like another like hour or two. Okay, cool. All right. Have a good night, guys.
Thank
Good
you very
stuff.
much.
Good night, guys.
Bye.